Share entire screen. Okay, can you see? So the reason why, first let me go to 4 hours. So the first thing I saw here was the sweep on the big time frame of the daily, and then first thing I noticed on the left side, it was no liquidity in between to get to the daily high. So that told me that we should, after sweeping this, in some moment get to the daily high because there's nothing in between. So I followed closely the how it played out on a lower time frame, on an hour. And then what I noticed was that at 9 o'clock was impossible to make a decision, at least for me, because it was very weird. At 9 o'clock, you see it, we wicked up and we wicked down. And I was kind of hoping I could have find my entrance here. And even on a 15 minute, it just nothing really made sense for me to base my entrance there. So it was this one, you see, 9 o'clock, because it was just it wasn't sweeping nothing yet. So what I did was I would have skipped that one, and then on an hour here, what I noticed was this swing up, which is C2, C3 reversal, and it was ideal. And what I did was, as you can see here, I would wait that we get confirmation on this one, which would be my full confirmation of a perfect C2, C3 reversal. And even though it's 11, I decided to go into the trade on a fourth, beginning of a fourth candle, because again, I didn't see any liquidity here
No,
blocking
you
it.
did good.
And then you see, it was
No,
a winning trade.
that's perfect.
Yeah, so this day we wouldn't really enter 9, right?
No. Oh, well, you could technically, because look, that's C2, and then look at C3 right next to it. It's already confirming to you that we're going up. Because if you go, okay, look, this is the hourly, right? Go down on the 5-minute.
Yeah, sorry. And here, my confirmation for the fourth one also was we hit this order block.
Yeah, that's perfect.
That
You
we
could have even
created.
entered off that order block once it starts rejecting on the lower time frame.
Exactly. And so yeah, that probably it would be looking something like this on a
Yeah.
lower time frame.
Yeah.
Just based on an hour, I was like, okay, this is my 100%
You
confirmation.
took the
And
safer entry because you took it at the open of that candle.
yeah, yeah,
Yeah, it's good.
so
You did really good.
okay, good, because I started today very bad. I don't know. I'm never gonna take 3 days off anymore from the charts because I forget things. So, and also on the end, I'm gonna just write down the proper way. So you said on 5 minutes.
Yeah, check the 5-minute. Check the where the C2 was.
Um,
So it's right there at the
oh,
bottom. Not
this
there.
one.
No,
11. Oh, here.
not the other one
Like
to the left. That's the
this
C2.
one.
Yeah. So check 10.
Um,
Check 10 o'clock from there.
10 o'clock is here.
Yeah. So
This one.
that 10 o'clock low was C3.
This one
Yeah.
here.
Yeah. And you see how the order blocks are all respecting.
Let me see. Right here is the order block. So this one, you mean?
That one, and then the next one too, right after, because we expanded up and we broke it, and then we respected it again with the swing. Yeah, we kept respecting and we kept pushing up. So it's just showing you that we're going up.
So here basically I see from this one. So we have C2, C3 again, and yeah, it did ideal formation. It went up. So you think already from 10 o'clock, we could have been in the trade.
Yeah. Because if you look at the 4-hour, check the 4-hour real quick. By the way, for your time frames, you see how you have a little star next to the time frames when you drop down the option?
Where is that?
You know,
Here?
when you pick that, you see when you put your mouse over it, there's like a little star next to it. Yeah, click that. Click the star. Click the 4-hour, the 1 hour, the 30-minute, 15, 5, 3, 1, and then go scroll down and go to the daily, weekly, monthly, 3-month. Okay, you're good. So then it's all
okay.
there. So it's easier to access.
Okay.
So you
So here-
see, check the C2 of that candle there. What time is that? Not that one, the other one.
C2, sorry.
That's
7
7.
o'clock.
So that's 6 o'clock in 4x time. Because in you're using a CFD chart.
Oh,
But it's fine, it's fine.
Yeah.
It's fine, it's fine.
Yeah.
So that's 6 o'clock, right? So 6 o'clock has the C2 manipulation. Because right when we open at 10, which is the next candle,
Mhm.
it should be a C3 and a continuation. So you see how that's a C2?
Yeah, this is C2
Yep.
and then C3.
Yeah, exactly.
Yeah.
So that's how you would be
Yeah.
framing that trade. So now that you're
because of
you're on the
itself.
you're on the 4 hour right now. Go on the 1 hour from that. Yeah. So you took exactly the proper trade.
Yeah.
Yep.
Yeah. Oh, yeah, I went for the obvious. I
Yeah.
just didn't want to.
Yeah, you took the perfect trade because that's how I would frame it too. So right from there, C2, you have the order block, and right at 10 o'clock. Well, in this case, it's 9 o'clock because it opens at I think it's 9. No, 11. It's
That's why I
11.
was thinking-
Yeah, 11. So that 11 o'clock when it came down and it respected the order block, that wick. Yeah, you see, that's the expansion up. So the next hours it expanded up. But you took a good setup. You took a good continuation.
Okay,
Like
good.
it's still following the narrative.
Can I change? Is here where I change to EST or how do I
No,
change?
it's still EST. It's just that you're using a CFD chart. So you see your chart is NASDAQ.
Yeah.
Okay, so I think now is a good time for you to switch charts to NQ. Like go in top left where it says NASDAQ, click that and put NQ. So that first one, E-mini NASDAQ 100 futures. Yep. So this chart should be the one that you're using. So you see the time differences. There's 1 hour in front.
November 25. Okay, so is this the same?
Yeah, it's
yes,
the same.
Yes. This was 9,
10. Yeah.
10.
So
11.
go on the 4 hour with this. Yeah. So this was just like a continuation up. 4.
Right.
Yep.
Okay, so good. I took a good decision.
You took a perfect trade. Like it was perfect.
Okay. All right. Good. I have some questions written down that's gonna help me next time when I sit down. I can immediately confirm. Sorry, I got a text. Just 1 second.
Yeah, no problem.
6:35.
I like the Mac user interface.
No, it's good. It's good, but I'll probably switch it up as soon
Yeah.
as I can. However, it's 6:30. Sent. Okay. Okay, so I'll let you go with the training, and then I have some questions.
Okay.
Just
so
I have it set in stone.
Real quick for the NASDAQ chart, remove the replay feature. I mean, unless you want to keep it, I don't know, like if you want to stay on the chart or whatever. But
No, later.
Okay, so you see at the top there's a little D, like an orange D.
Yeah.
Okay, click that. You see how it says, okay, data is delayed by 10 minutes for this chart. That means that you have to buy the CME data from TradingView. It's like $3 a month.
Okay.
Yeah, so click the A on your profile picture. And if you go under, put your mouse on your name, and then settings and billing. If you scroll to subscriptions, yeah. Real-time market data. Explore now.
All right.
All right. So see how the little D at the top left, like the orange one, disappeared.
Ah, right.
So if you click that, like the gray minus sign. No, not that. Move your mouse
gray
over.
minus.
See the gray minus sign? Yeah, just right next to the
Gray
CME. In a little circle. You see where it says all the numbers there?
Here?
No. Like move your mouse to the left, to the right, under 15 minutes. Yep.
Ah, here.
Yeah. So see now,
Okay.
like you have like the up to date chart.
Okay. And exchange time zone is UTC. So
Yeah, that's the
do I need?
exchange. No, you're good. We keep it on New York.
Okay. So, but New York is not EST,
EST, yeah.
but this is UTC.
Yeah, because it's UTC is just another way of like that's UTC -6. We use UTC -5.
Ah, okay. And which is
New York.
East time.
Yeah,
Okay,
Eastern New York time.
Okay. All right. Cool. So I'm set. And which are the other?
So the other one is like ES.
The one that you told me.
Yeah, ES.
Can I put them in like a favorite or something?
Yeah, I think they're in your watch list already. If you go on the right, yeah, check under features.
No, I don't have any.
Oh, you don't have it? Okay, so see at the top it says, yeah, the little plus sign. Add NQ, add ES. So type in
Is it
ES.
this one?
No. Type in ES. Yep. And then
Okay.
YM.
YM.
Y.
No.
YM. Yeah, that one. And then add gold as well, GC. So GC gold, yep. And then add silver as well. SI. Silver.
Okay.
Cool. Perfect. Yep. Should be good. So now you have NQ. Yep. Perfect.
And then I'm gonna need to know, like the other day you said, which one confirm which. I need to write down all of that.
Oh,
for beginning.
like the SMTs. Yeah, we'll do that at the end because that's like
Okay.
that's like at the end, like pretty much.
Yeah. I guess when I'm ready to actually take those fake trades, so then I know what else to follow.
Yeah.
So yeah,
but
let's finish up.
SMTs
the
are
trading.
like a confirmation of what your bias is already. So like if like you should already, because like even with that trade that you looked at, if you could go back to it, is there a way to go back to that? Or
No, I think
it was like
because it was
November. Yeah, it was closed, huh? Because we were on the replay feature. But anyway,
Yeah.
so even on that trade, for example, you would have found some type of SMT at the lows confirming that it was going to keep going up.
Okay.
You know,
All
but
right.
that's you could still trade even without SMTs. It's just a method to look for more confirmations, you know?
Yeah, here what I was doing, if you see on the right, I was following DXY when I was trading forex, so
Yeah.
it would be my extra confirmation. If he's going up, I knew that euro is going down or
Yeah,
something
exactly.
like that. And it worked always.
Yeah, for
Only
sure.
on the small volume times, they would just separate the movement.
Yeah,
So
that's good.
yeah. Okay. Cool.
All right, whenever you're ready,
All
Paul.
right. Yeah. Let me close my.
Awesome. Let's
All
continue.
right. Stream.
Let me know if you can see the screen.
Yep.
Awesome.
Yep.
So we're just gonna quickly touch up on liquidity real quick again, just to see what kind of liquidity we're looking for and mm, anticipate. So, where does liquidity exist? Liquidity is typically found at obvious trading levels such as equal highs and lows, trendline liquidity, session highs and lows, and previous daily highs and lows, or weekly highs and lows. So the higher, the more higher time frame you go, the stronger the liquidity gets.
Okay.
Liquidity and smart money manipulation. Liquidity grabs before the trend moves. So smart money does not chase price; they engineer liquidity grabs. Do you remember when I asked you like what the markets do? There's two ways the market moves. Do you remember what they were?
Um. Not. That's why I have to write down these things
Yeah,
because
yeah.
of
Go
the.
ahead.
I think I wrote them down. Liquidity. Um. But let me see. Session high lows. It's building liquidity and sweeping liquidity, right?
Exactly. Yes, sir.
Okay. Yeah. Yeah.
Glad you wrote that down, bro, because that's very
Yeah.
important. Um,
Okay.
price before price makes a major move, institutions hunt liquidity to fill large positions. Um, stop hunts at false breakouts. Retail traders enter breakouts, but smart money uses this to trap them. For an example, price breaks above the high, triggers buy side liquidity or buy stops. So a lot of retailers are buying at the highs, and institutions sell into it, then price dumps. So this is why we don't, look for buys at the highs or sells at the lows, unless the higher time frame bias follows, right? Um, Most
Okay.
cases, after we sweep the higher low, we're looking for the reversal pattern. So
Okay.
CIST after liquidity sweeps, once liquidity is grabbed, price often shifts structure in the opposite direction. This confirms that smart money has absorbed liquidity is now moving price purposefully. So CIST will give you that confirmation that okay, we grabbed Asia low. Now we should be, going up off the CIST or slash the order block, right?
So
Um
think of like the CISD of as like the V shape. Remember we're talking about the V shape?
Yeah. 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 I was
Yeah,
following it today. Um.
perfect.
For my
yeah,
the
exactly that V shape.
That's gonna
two
show you the
trades that.
manipulation.
Yeah. Okay.
Exactly.
So that V shape is usually you find that V shape in your C2 candle.
Mm-hmm.
So that'll be
Yeah.
the manipulation. It'll make the change of state with this like with a V shape, and it'll make also like an inversion fair value gap in some cases. So the moment you
Yeah.
see us close above that, then it's pretty much confirmed that okay, we're changing directions.
Okay.
Exactly. So these are just different types of liquidity that you're gonna see every day, right?
Right.
Um, the first one is as you see is just a low before the push high,
Mm-hmm.
and a lot of times what price will do is take this low out and then start pushing higher.
Okay.
Same with this, take the equal low and then start reversing, pushing
Mm-hmm.
higher. In this case, right, we're aiming for this liquidity. So let's say we're looking for sells, then we can aim for these lows.
Right.
Because it's built up,
Right.
yeah.
Right. Right.
Yeah. So yeah, this is just explaining how you can use liquidity plus CIST and different displacements to enter in your positions, right? You can use CIST, FEG, OB.
Mm-hmm.
Those are the three main things that we look for every day to confirm our bias after sweeping the lower high.
Okay.
And we can also use the liquidity pools on the opposing ends to target. as
Right.
our TP.
Right. Like today, I didn't see on that last trade, I didn't see any internal liquidity sitting before the daily high. So I knew my TP was going to be daily high because there is nothing in between, right?
Yeah, exactly.
Mhm.
Exactly.
Okay.
But
Okay.
you know, if there's nothing in between, if you don't see any liquidity, you can target order blocks or fair value gaps, even, you know, as your target points.
That's pretty much where your target was. It was at the fair value gap of like higher time frame.
Mhm.
I remember all the way to the left was those
Yeah.
big black one.
Yeah,
That's
yeah,
what
yeah.
you mean. I know.
Exactly.
The
Yeah,
Yeah,
that
B.
would be your target too.
Okay.
But you had the
Okay.
daily
Got it.
high as well, so it's like double, like overlapped.
So,
Right.
you know, those, you know, fair value gaps that you target, those are considered internal. So
Internal.
you're still targeting internal. It may not be the high, but still like within an internal range, the fair value
Okay.
gap. So yeah.
Okay.
So this is where we get into internal versus external. External liquidity is found at major market structure levels, so at the extreme high and extreme lows. That's where you're gonna target external liquidity. And internal liquidity is when the liquidity is within a market range
So fair
between the
value
two
gaps.
external points. Yeah, fair value gaps, OBs, any highs and lows between two external points. Yeah.
Okay.
Two external points meaning two swing points. Like it's a range.
Right.
Yeah, low to the high or high to the low.
Okay.
Understanding these two types of liquidity helps traders anticipate where smart money is targeting liquidity before making their real move. So internal liquidity refers to liquidity inside a market range, not major highs and lows, but within structure. This includes fair value gaps, order blocks, trend lines, previous session highs and lows, intraday highs and lows,
Okay.
and
So the session highs and lows are considered internal because once we pass the session high and low, we are getting into external for that day. Is that correct?
you know, session highs and lows can act as internal and as external also, because sometimes, uh, let's say like you know Asia high created the yesterday's high, so that's you know your external high, and so it can act as your external, but also it can also act as internal. So that's
Okay.
pretty much both, right?
Just
I would
depends on the
say,
context.
yeah, just depends on the context exactly.
But they're points of liquidity. Like session highs and lows are important. There's just
Right.
in terms of like the intraday range, they're considered internal. You know what I mean? Like it's inside
Yeah,
the
yeah.
daily range.
Exactly.
Right. Okay. Cool.
Like when you have that Asia soup model, like where London sweeps Asia, that's sweeping an internal level.
Hmm. Got it. Yeah, that's what I was asking. So it's considered still because it's within the day.
Yeah.
That session would be internal.
Yeah, because if you're looking at it from like the hourly or like the 4 hour, like it's not really, it wouldn't be considered that. But like if you're looking at it on the like 30-minute, 15-minute, 5-minute, then yeah, it would be. You know what I mean? Like it just depends
Right.
on how you're looking at it, like the time frame.
Okay. Okay.
Yeah. So internal liquidity provides resting orders for prices balance before reaching the external liquidity. So a lot of the times before reaching the external, we'll take out an internal. In most cases, before reaching the opposing swing point, right?
That's the framework. That's the internal to external framework.
Exactly.
Probably from session high or low to the external
Yeah,
before
exactly.
that day.
Yeah.
Okay.
Exactly.
Yeah.
Alright.
So like there's three frameworks we work with. It's internal to external to internal, or external to external.
Yeah, Dado just first trade when we just came back now, he caught one external to external and
Yeah.
it was a huge trade.
Yeah,
It
those
was
are the
just
best. Those are the best,
huge.
man.
Huge, huge.
Because
It
external
was
to external, it shows reversal.
Yeah, he caught weekly to weekly.
Yep. Yeah,
Imagine.
that's great.
And I couldn't understand how he saw that, because the only difference was the only liquidity where was sitting that I wouldn't enter before, that it was on the middle of that, exactly on the middle. So I told him, you know what, okay, I see why it would go to weekly, because low, because there is no other liquidity past that. So he said I would enter already here, and I said, well, I would wait for the confirmation that we're gonna pass this liquidity on half, and then it would still be a huge win.
Hmm.
And somehow he, without that confirmation, he was right. But I was also right, because I had a clear entrance
Yeah.
after that last liquidity before the weekly was swept. We just went through it, so I would
Mhm.
probably wait for the top back, and then I would enter. But it was a huge win, and it was easy to spot because on a high time frame there was no other liquidity whatsoever.
Yeah.
So it wasn't really risky, but it was risky in terms of, you know, how big was the win.
Yeah.
It was huge. But I saw one external to external at
It
least.
happens a lot. It happens a lot. External to external happens a lot. It happens when higher time frame areas start to shift, and
Mhm.
you see a lot of like external to external, because it's at the
But
lows or highs, you know.
yeah, I was still kind of worried because we were going through sessions again,
Mhm.
and I was worried like, okay, can something in session happen to stop this move that is expected on a big time frame?
It was a
And it didn't.
short, right, that he took.
Short, exactly.
Yeah. So if you're like if you have like like a bearish bias, when you're following the narrative and it's going down, the only reasons why it would go up is to sweep the liquidities and continue downside.
Yeah.
Yo, Paul.
I mean, I could probably even find that day. If I look, it was November 25. But it's okay. We can check later.
Yeah.
It
All
was
right.
November 25. Just before that, actually, maybe 21. I'll check it later. Okay.
Okay.
Cool.
I mean,
Uh,
that win was good for the whole month, literally.
I know. Yeah.
That would be,
You could literally take wins like that, like if you catch a good opportunity like that, and be done for the month.
yeah, and I wouldn't for sure enter any other trade that is not like triple confirmed from that point.
Yeah.
I would just not even risk it.
All right, Paul.
yep. Okay, cool. So internal liquidity levels are used for trade entries before price moves towards external liquidity. So exactly
Mhm.
what Adrian said, like this is the whole model, right? Uh, most cases you'll see yourself catching internal to external. That's
Mhm.
like
That's like low hanging fruit. Like internal to external is like my two favorite ones are internal to external and external to external, obviously. Like those two
Mhm.
are like high probability. They're really
very
good.
high. Yeah.
External to internal is not that it's high, like less probability. It's just that it's uncomfortable because you're coming from a high and you're going back to the internal. But that's pretty much setting up, like the external to internal is setting up the internal to external, because if we're in a bullish
Mhm.
market, it's just gonna come back to the internal and then from the internal go back to the external. You know what I mean?
Yeah, yeah,
Like it's setting
yeah,
it
yeah.
up. Like you could still catch a good trade. I caught one on a Friday from external to internal. It was a $5,000 trade. You know, like you can still catch good opportunities from
Right.
external to internal. But one, like as you're learning, focus more on internal to external and
External.
external to external. Like those two
So
are way higher probability.
external focus on.
Internal to external and external to external.
So in
You'll do the external to internal later. But right now, like focus on internal, external, and external, external. Like once you get
Okay.
more comfortable, you'll do the external to internal. It's still the same process, you know, it's the same thing. It just it's most of the time it's not even like I wouldn't say it's like worth it. I would much rather do the internal, external. It's way higher like probability, way more satisfying. Like the moves are way easier to see too.
the one I just caught, the last one I just told you was internal to external.
Yeah, it was internal, external. Like you see how clean it looks when it's internal,
Yeah.
external. It's just much easier to spot.
Yeah. Okay, I wrote that down.
Awesome. Here's external liquidity. External liquidity refers to liquidity found at extreme levels the institution's target on a higher time frame. These are typically higher time frame liquidity zones, such as previous day highs and lows, previous weekly highs and lows, equal highs and lows on a higher time frame, and obviously swing highs and lows. So institutions engineer price action to seek external liquidity pulls before reversing. Price usually runs to external liquidity before making a significant shift in the market. So,
Okay, that's clear.
yep. So here's like an example of external liquidity being taken and seeing a sign of weakness, right? See how we're creating a swing, and off this, you'll be able to look for your entries. So this is an example of external to internal, right?
Internal.
But realistically, it's targeting the external. So external to external. So this is kind of what it looks like.
Yeah, it's like a
when you're,
reversal.
yeah. When you're looking at the external to external pattern, this is what you're looking at.
External to external. Okay, yeah, because I see that small internal liquidity. I do see it, but the major one that I would target is that one on the lows.
On the
all
lows,
way,
yeah, exactly. Because it would
Yeah.
make your market maker model right there. You see how it's moving up and then it moves down?
Yeah.
Like that's your
Exactly.
market maker model.
Okay. Yeah.
Same thing
Alright.
here.
So let me see. Previous
External to
daily low.
external.
So there we swept the previous daily low, and then we took it all the way to previous daily high.
Yep, external,
Exactly.
external.
Yeah.
And this is the soup model here, the Asia soup, right? We
Right.
take Asia high during London, and then we create that swing, and then we go down to where Asia low, and then eventually to previous daily low. And so,
Okay.
And New York has the reversal. So New York usually like you would look for 6 a.m. and 10 a.m. 4-hour candles. That's what you would focus on for New York. You know what I mean? So
yeah,
if 6 a.m. creates the like C2, then you can expect 10 a.m. to create the C3. It's just like in your example that you showed, that you
Right.
took your trade. That was like a 10 a.m. continuation for New York.
Yeah.
Because
Yeah,
we opened up, we created the wick, and then we continued the move after we had 6 a.m. create the C2.
Right.
And that's how you would frame it. Because that's how like that's the model, you know, that's pretty much the model. You're using candlestick logic in order to anticipate the next move of what's gonna happen.
Mhm.
And if everything follows your confirmations, right? Like the candle 3 is respecting the invalidation areas of candle 2, and we have the change of state, and we have the order blocks on the lower time frame, and fair value gaps are respecting, they're moving in the direction, then you're good to go. You know we're going to the external.
Right. And here on this entrance, It says entry 3. So would that be the first target if we were going, or you would let it run?
Well, the first target would, like, if you want to take a partial, would be like London high, the session high.
So the previous session high. Okay.
Yeah.
Okay.
Yeah, that would be like an easy first target.
Okay. Got it.
If you want to take some money off the table, if you want to, you know what I mean? Yeah, you make a decision. Or if you want to move your stop loss to break even and let it keep running.
Right. Okay.
But all you would, like, what you want to do is establish consistency, right, over time. So what you would want to do is aim for like a 2R trade. Like
Right.
anything above 2R is just extra on the table. Like, yeah, if you can
Right.
capitalize more than 2R, then sure. If you want to capture more money, capture more capital on your trade, that's fine. But over time, what you want to do is average out on like 2R trades. So once you hit 2R, you exit, you're good, and then you come back the next day. You know what I mean? Like,
Right.
you're building your foundation like that.
Okay.
Is that Dado?
No, it's actually my wife's phone is connected to this computer, so it's also ringing. Amor,
Oh.
alguien está llamando. Okay. All right.
All right.
Yeah, probably for the beginning, I would definitely target the session high, which would probably be 2R at that point.
Yeah, exactly.
And then I would just see if I hit back the fair value gap or the block like it's shown, and I see a clear swing. And to be honest, I would just wait for first candle to go through the sessions high, London session high, and I would already look for the entrance because there's no other liquidity before the previous day high.
Mhm.
So I would kind of do that. Maybe not even rushing to go in off a fair value gap. I would wait just to pass the London high.
Well, if you think about it, you're not really rushing, because at that point you have your C2 established with the sweep of the low of London. Because your C2 would already be shown. Your C3 would be at entry 3.
Okay. So I would have on a high time frame
Yep.
C3
Yep.
hitting the fair value gap.
Yep.
And obviously.
Yeah, exactly.
Okay, got it.
Yeah,
Good.
exactly. Because everything would just be following the narrative. It's a story, right? So it's still following the story logically. It wouldn't make sense for this to just reverse from here. We just created the C2. We're expecting a reversal.
Right. And especially if we have C3 on that point, that's all confirmation we need. Yeah.
Mhm.
Okay. All right. Cool.
A lot of the thing about trading, right? You have to assume the risk that you're taking, right? So you're putting down money that you're willing to lose. So let's say you put down whatever your risk parameters are, like $100 per trade, right? So like on a 2R, you make $200, but multiplied over, multiple accounts. But you're taking the higher probability setups. Like, this is a high probability because you've already have your confirmations.
Right.
Yeah.
This is a perfect day if we have it like this.
Oh yeah. It happens every day, honestly. Like, it's very, like, if you look at the charts, if you open up a chart and you look at like the daily time frame, look at every single day. We take a high or low of the day and we continue up. You know what I mean? We have to go towards the direction. And the days that we don't take a high or low, it's just a consolidation day. You wouldn't even trade that. You would just wait for the next day.
Yeah, some days I would see we would take a high, but 2 p.m.
Yeah.
It would only happen late in day. So I wouldn't watch to enter then. I would still wait Asia and London.
Well, technically you could still enter on the PM session as well if you want to capitalize, but you just have to think about it in terms of the 4-hour candle, right? Because you're going to be focused on the New York session, right? So it's like 6 a.m. 4-hour candle, 10 a.m. 4-hour candle. If the moves don't happen then, and the PM session would be the 2 p.m. 4-hour candle. So then you have 4 hours to find like the opportunity, right, before the market closes. Well, maybe 6 a.m. and 10 a.m. we're setting up for 2 p.m. to expand. You don't have to be glued to the charts. You could just take a peek at it around 2 p.m. Eastern time and see, okay, what's happening? Is it setting up? Is it moving? You know what I mean?
And even though it's outside of the market hours, I could still go into a trade.
Well, it's still considered New York session. It's still within the market hours. Like it's just New York PM session. Because New York has two sessions. It has AM and PM.
I didn't know that.
Yeah.
So what time is the actual non-trading hours?
For PM,
Like-
it starts at 1:30. So think of it like a mirror, okay? New York AM, the opening is 9:30. New York PM, the opening is 1:30.
Mhm.
So the same way how New York AM has 9:30 open and then the next 4-hour candle is 10 a.m.
Okay.
It's 1:30 open for New York PM session, and then 2 p.m. is the new 4-hour. So it's exactly the same thing. It's just one is in the New York AM session, and then one is a PM session. You know what I mean? So the
Yeah.
same things you would look at for the New York AM session, you would look for the New York PM session relative to those
Okay.
times. So the 2 p.m. would act as your 10 a.m. You know what I'm saying?
Yeah. So there is still volume after 2 p.m.
Yeah,
I
yeah.
didn't know that.
Yeah, for sure. There's still volume. Yeah, there's volume until the end of the day. Like by the end of the day, there's something called power hour where more volume comes in right before the market closes in like an hour or two.
That's like 6.
That's like 3 p.m. like 3 to 4.
Oh, so that's when market close for the day?
No, market closes 5 for the day, 5 o'clock.
5.
Yeah. So
Okay.
at like 3 o'clock, there's something called power hour, like the last hour of the market. Like 3:30 to 4:30 has like volume injection because it's the end of the day, right? People want to make their money or whatever. There's volume coming in.
Okay. Got it now. I only thought it's a short window, 6 to 11, and if there's no trade, I stop for that day.
Well, you could do that. You can work in those parameters as well. It would increase your probabilities too, because if you're opening yourself up to the market even more, then you're risking also taking losses. Like you have a bigger window of losses that could be like taken. You know what I mean? But also you're opening up your window for more wins as well. You know, because sometimes like 2 p.m. has the move, like you mentioned. Like 2 p.m. sometimes the New York session is slow while the PM session like continues up. But if by the time like you have your like if you have your trade already done in the AM session, there's no reason to even take a trade on the PM. Like you're good, you're done.
Right. Okay, cool.
But for now,
Good
like
example.
since you're starting out and everything, just focus on the AM session. You don't even need the PM session.
Yeah, but the only thing was the other when I took an earlier test trade,
Yeah.
we didn't sweep the daily high until 2 p.m.
Right.
That's
So that
why
would be like a PM day.
Yeah, so that's why I was like, okay, it looks weird that now I cannot capitalize on this external high sweep at least to the internal, and then when I played it, it happened exactly, and I
Yeah.
was like, oh, I didn't, I just thought, no, we don't trade in those hours, and that's it. But now it makes sense. I would at least take that 2 p.m.
Yeah.
to the first internal that I see.
Yeah.
Because we
You
can at
can
least
still take PM session trades. Yeah, for sure.
Okay, cool. And then let's say that um, that in some weird hour, for example, in between the sessions. So London starts 3, but 1 a.m. we are sweeping previous daily high. Let's say, or even better, sweeping the internal liquidity going to external, but it's 1 p.m. 1 a.m. Sorry, and it's kind of in between. So is that still okay to enter before the session starts, or you would wait?
Well, personally, what I
longer-
would do is I would wait for the session to start and find the continuation.
Okay, okay. So
You know what I
that's
mean? Because you would it would sweep the at like 1 p.m. or whatever, like before the session starts, but then logically after it sweeps, it's gonna have the continuation after. So you can
Right,
take the
it-
safer entry and just wait for the continuation.
Okay.
The higher probability trades are the continuation trades anyway, because you already have all the confirmations.
Continuation would be after we sweep one
Yeah.
side,
Exactly.
continue opposite. Okay.
Yeah, exactly. Because you're trading away from the manipulation. So if we have the manipulation happen, we don't have to catch the manipulation. You know what I mean? We just let the manipulation happen and then we just follow the narrative by the
Okay.
continuation.
Right. Okay, cool.
But yeah, you can take trades in all sessions of the day if there's a setup. It just the time aspect has to do with the volume. Like it moves faster during New York.
Right.
And it moves like generally it moves to your targets during New York. So like Asia, London builds up your liquidity or creates the higher low of the day, and then New York continues towards the targets.
Right.
Or
Okay.
for example, like on Friday, New York had the reversal. New York had a reversal day. Yeah, Paul, open up your chart real quick for Friday.
Friday.
Yeah, NQ. So look what happened here. You know, this is Friday. Go on the hourly. So the open of the day is at the low over there. Check-
The open of the day.
Check 6.
Aha, yeah, I see.
Yeah, so that's
see.
the open of the day. We opened up, and then
Mhm.
what happened? Asia, we were pushing up, and then London,
Yeah.
we were pushing up, and then New York, it had a reversal. So
Okay, yeah.
now, like, just to introduce you SMT real quick, can you put double charts like side by side, Paul, and put ES next to NQ? So you see on the right is ES, and on the left is NQ. Yeah. So NQ swept the previous daily high, ES didn't.
NQ previous daily high. Yeah, I see.
Yeah. Now,
And there, yeah.
yeah, and look at between the candles too, like the 10 a.m. candle. So 10 a.m.
10.
ES, we sweep the previous candle high. We sweep the 9
Yes.
o'clock high, and then NQ, we don't sweep the 9 o'clock high. See that?
NQ. Yeah, we didn't sweep.
Yeah.
And that one swept.
So this whole idea is known as the cracking correlation. So in theory, both of these markets have to be correlated 100% the same. But because there's a crack in the correlation, we know that there's some
Okay.
kind of switch happening. It's gonna switch. You know what I mean? So it's showing you a sign that it's gonna flip.
Flip meaning going from, in this case, bullish, that is gonna flip,
Exactly.
flip bearish.
Exactly.
Because so if they break the correlation, that's an extra confirmation.
Exactly. Exactly.
Okay.
So the moment over here where ES swept the high and NQ didn't, I knew that we're gonna have a New York reversal day. because-
and that was 10 a.m.
That was 10
You
a.m.
said-
exactly.
So 10 a.m. we saw. Okay. Okay. On the end of the class, I gotta write those things down. Which one to follow? when
Yeah,
I watch.
you would follow like look at the 4 hour real quick, Paul. So you see how we're making a swing at that point?
Which chart?
Both
the left
charts.
one? Both charts.
Yeah.
Yeah, there is a swing there and there is a swing there. We have, yeah.
Yeah. So that's where you're framing your trade from, like the 4 hour, and then the C3 is the 10 a.m. So look at the 10 a.m. on that candle on the 4 hour.
10 a.m.
It's creating
Right,
the C3.
right.
And then on the ES, it's creating the C2, but it's a C2 expansion, like reversal to expansion.
Okay.
Make sense?
Yeah. Yeah, I see the swings.
Mm-hmm. So when you look on the 5 minute from here, you have your V shape manipulation, and you're just trading away from it. We swept the London high. We have an SMT. Does that make sense?
So the London high is where?
It's right
That we
before.
swept?
Yeah, it's that consolidation area.
Okay. And then we swept it on the right side, right?
Yep.
Or actually, yeah. And then from there, we would expect reversal because it's a sweep of the session high.
Yeah, and it's a previous daily high sweep, and there's an SMT.
Okay. Okay.
And there's a candle sweep of the previous hourly high. Like there's a double SMT. There's a previous daily high SMT, and there's a previous candle SMT too. Like the previous hourly on ES swept the high, but NQ didn't.
Let me see. Yeah. Yeah, I see.
Mm-hmm.
This
So,
one sweep.
yeah. So that's a clue. It's just showing you like the narrative,
Okay.
because there's a crack in correlation.
Okay.
So look at the 1 minute over here. You see how we create that SMT right there, and then we have the change of state too, and it's just continuing the narrative at 10 a.m., which is a new
that's
4 hour candle.
Right. And we would focus on the 4 hour to candle start to look for the break in correlation.
Yeah.
Okay.
Yeah.
Let me write that.
Because we have the SMT already forming like all pre-market, because we had the previous daily high swept for a while, you know, and by the time New York opens up, we're still holding that SMT.
And what was the SMT?
It's the previous daily high and previous daily on ES and NQ being swept.
Breaks. Look for breaks in correlation for reversal confirmation. And that will be NQ. Look at ES, right?
Yep.
If I'm looking to okay.
Yeah, so it's the same logic of when you were looking at the dollar with Forex, you know?
Yeah.
But instead of it being inverted charts, they're not inverted. They're both together. But you're looking at the difference between it. You're looking at the divergence.
Yeah, it was easier on the Forex because I would just need to see that, and usually the dollar would react faster.
Mhm.
So I had time to see, okay, dollar just dropped. I knew the euro is gonna go up, or stuff like that, and it would. But it's different. There they were opposite, and here they're behaving the same. But
They're
I'm
the
looking
same.
at the just some
The cracks.
displacement.
Yeah,
cracks.
you're looking
Yeah.
at the cracks in the correlation, because these
Okay.
in theory have to be the same. They have to be the same because they're the same markets. But
Mhm.
what, like, when you see a difference here, this is smart money. So smart money pushed ES high and swept the high, but NQ we didn't push it high. Why? Why is that? Because NQ is stronger. That's why.
Okay. And
It-
I didn't know this that we are watching the previous candles high in any situation.
Well, of
I need
course,
to fix.
it's liquidity.
You see, I forgot that part. Now that you're mentioning it again, I kind of remember that it was important.
Well, think about it. How does a swing set up? You would have to have a
Right.
sweep of a previous candle's high.
So yes, yes. For the bearish,
Yeah, and the bullish too.
and then so it would but it wouldn't be sweep of the low.
Well, same thing, you know. That's what I mean. Like sweep low, sweep
Okay,
high.
okay. Yeah, I mean, okay, cool. Okay,
Just the logic
all right.
behind it. Like a
So it's
swing.
the same thing
Yeah,
as a swing. It cannot be swing without that anyway. So if I'm just
exactly.
focused on swings, that I am already watching the previous candle. So that's it. It's the
Exactly.
same thing.
Exactly.
Okay.
Because if you're
Okay,
looking at the
it's the same thing.
4-hour swings, you have to be looking at
Mhm.
the previous candle. Like what did the previous 4-hour do? You know, what like if this previous 4-hour created the C2, then you're anticipating the next 4-hour to create the C3. But think about the range and time, right? Like if you have
Yeah.
if you're anticipating 10 o'clock to be a C3, and which is an expansion candle, that means that there's 4 hours of expansion that you're expected. You know what I mean?
Right.
So
Right.
it's not gonna happen quick. It's gonna happen in steps. You know what I
Right.
mean? So you can
Yeah.
find your confirmations on the lower time frame, because the lower time frame is exactly the same as the higher time frame. It just broken down smaller.
And why did I earlier? I couldn't see a sweep of the daily low on lower time frame, but I saw it on a 4-hour. How is that possible?
What do you mean?
Yeah, I was on a chart and I was in a small time frame and I didn't see that we swept the daily low. And then when I went to 4-hour, I saw that we swept the daily low previously.
Which chart was this?
The one that I was the Nasdaq. And it was weird for me how come I didn't see it on a lower time frame.
You're
Maybe
gonna
I mixed up the lines at that point if it's not possible.
maybe. Well, you're gonna have to show me like the chart, because I
Mhm.
can't. Like if you show me the
Well,
chart, then we would see.
okay.
Which day was it?
Yeah.
Was it yesterday? Was it
No,
Friday?
it was somewhere in where no, it was in November. Because I did the December, so I just skipped to November.
You know what it is? Maybe it's the replay tool, because TradingView sometimes has a weird like shit happening with the replay tool.
Yeah, because I would have missed the trade that I actually confirmed when I saw that we actually swept on 4 hours. I went back on the small time frame and positioned myself, and it was actually winning trade. So that's why I was kind of worried. How come that I didn't see this on a lower time
I think
frame?
it just has to do with the TradingView like tool. Like later on, you're gonna jump on TradeZilla. We're gonna do backtesting on TradeZilla.
Okay.
Like instead of TradingView,
Okay.
because TradeZilla has better data, has better ways of doing backtesting.
And that's like a different platform. Am I gonna use that one for trading later also?
No.
Or-
It's strictly for journaling, and it's for backtesting.
okay.
But this is later on. Like right now, you just have to, even when you start taking trades, like you'll do it on a demo on TradingView before you like jump onto TradeZilla.
Okay.
But so far you're doing good, bro. Like you understand everything. Like you're grasping everything very well. You're already taking good trades, man. Like the trades that you're taking are perfect.
That's great, man. Great. I still have. I have. Once we finish the training, I wanna let you go to finish the the PDF, and then I would like to just jump on a one day from the beginning and to go over this what you said, because I wasn't doing it this way. What you just said, the like to know, okay, 6 to 10 made this, then 10 we expect at the 4 hours. So I would just go through one day with you from, from the beginning of how I would. Okay, first I watch this time frame, then I watch this one, then I watch this one, and I look for the things. So just to have an order, because I'm not doing it in an order
Yeah,
right now.
the order is always from big to small. So you find your confirmations on the big, and then you just move on the small, and you reconfirm your confirmation on the small. So
Oh,
you can't be jumping from small to big. It doesn't work like that. You have to go from big to small.
yeah, that's
So
what I was doing.
yeah,
I
yeah.
confused myself
Yeah,
going back and
exactly.
forth.
Yeah, you would confuse yourself. So you have to establish like the groundwork is from the 4 hour and the 1 hour. You know what I mean? And then from there you go down to the 5 minute to the 1 minute, whatever. Like you find your fair value gaps, order blocks, all that. But it should be following the narrative of the 4 hour. So like let's say if you're anticipating a 4 hour C3 expansion, then on the lower time frame, this is what you would see. You would see the order blocks respecting, the fair value gaps respecting, going towards your liquidity, going towards your targets. You know what I mean?
Yeah. And there also I would have. That's why I wanted to go through one day, just to tell me from where am I focused on the fair value gaps and order blocks, because sometimes I have from the previous um, hours or even days some order blocks that I'm maybe not even that I'm not supposed to watch them anymore. So just kind of to know, okay, from let's say 6 o'clock, I don't need to watch the order blocks from let's say 6 a.m. I can stop watching the order
No,
blocks
you
that
have
were
to.
created.
They all play a role. Like there's no like situation where you wouldn't watch an order block because of a certain time. You know what I mean? Like it's still the same chart. Like you're looking at the same chart. Like those order blocks will play a role later on. You know what I mean?
Okay. Okay.
Or fair value
Okay.
gaps or whatever that you're looking at. But the main thing is, right, is on your it's always your higher time frame, because you're working off of key levels that are in the higher time frame. So
Hmm.
your key levels would be, higher time frame fair value gaps, higher time frame sweeps of highs like swings, and higher time frame order blocks. Like that's where you're framing your setup. And then from the higher
Yeah.
time frame, if you come into a higher time frame key level, for example, let's say you have a higher time frame fair value gap, right? Price goes into
Right.
a daily fair value gap. Well, you're framing your trade off of the daily fair value gap. And from there, you're establishing the lower time frame entries from that. Because
Okay.
let's say the day, go on the daily time frame, Paul. Like for example, let's say like find a like a swing point on the daily, like honestly any swing point, like that low, go to the right. Yeah, that low, not that one but the one next to it. Yeah, that low. Like look at that low, look what happened there. Well, this is the daily time frame. Okay,
Okay.
we have the previous daily low swept on one asset, and then the previous daily low not swept on another asset. Well, that's already showing you confirmation. You know what I mean? So now if you have this framed on the higher time frame, what can you expect candle 3 to do?
Where are we? Which candle is 2? So I know which is 3.
Well, candle 2 is always the same candle. It's the one that swept the low. It's the one creating the swing.
Right. Okay. So that's the last black one is the C2.
Yeah. Well, look at it from the ES. See how ES swept the low? So
Yes.
that's candle 2.
Okay. Oh, so I'm watching to the right side. Okay.
Both of them. Because if that one didn't sweep the low and this one did sweep the low, then you have to act like that one is candle 2 as well, that it did sweep the low, because it's an SMT. That would be 2. Yeah, that would be 1. That would be 2.
Okay.
See what I mean?
And
So if we have this established on the daily, what can you expect candle 3 to do?
this would be C2, C3 expansion,
Yeah,
and
exactly.
it would be a ideal confirmation.
Yeah. So
So
from here, what would you do? You wouldn't jump on the higher time frame. You would go lower. But you have your idea established. Okay, well, C3 will expand.
right.
So now you're
There.
framing your day off the C3. So go on the 4 hour. Yeah. So you see now we're on the 4 hour. Now look at
Right.
this. Look at the swing on the 4 hour. For the candle
we-
3. No. Don't erase. Keep the
Okay.
labels.
Okay.
Go back to
Nice.
with the 3 as well.
Oh, okay.
So candle 3 is
Right.
in this area, yeah? You already have candle 1 and candle 2 shown to you. So candle 3,
Yeah.
now look at the swing on candle 3. Like, is that not obvious on the 4 hour?
Yeah, and also we have the fair value gap hit
Uh-huh.
there.
Well, Paul,
Um,
put your candle on the wick low of right above candle, like right above the 3 label that you have. See
Oh,
where?
like right here?
Yeah, that. Okay, what time is that? That's 6 o'clock.
Yeah,
6
6
a.m.
6 a.m.
Yeah, so that's 6 a.m. right there. So, like I said, 6 a.m., 10 a.m. is what you would focus on, right? So,
Mhm.
6 a.m. has another SMT
Yeah, it
because
does.
because
Yeah.
on ES we didn't sweep the low.
Of the previous candle.
Yeah.
And there we did.
Yeah, so that already would be a setup. So now go on the 5 minute from there. That's internal to external. You know what I mean?
Let's see. So, okay, I see. Yeah.
See what I mean?
Yeah.
So
See,
you're
this is new to do the correlation. That's why
yeah,
I'm getting
that's
a-
new. Yeah. But just the idea of like you're building your narrative off of the higher time frame.
Okay.
Like that's you're going from the daily 4 hour, 1 hour, 5 minute entry. From here you have like zoom into NQ. Like you see the change of state, we sweep the low, we have a change of state, and now we're just continuing the narrative. We're holding order blocks, we're holding fair value gaps. We're creating swings to the upside.
Yeah, I see the order block respected. I see the fair value gap tapped.
Yeah. And we have the SMT. That's something new right now for you, but like still it's a sweep of the low. You know what I mean? So we have a sweep of the low and we have an order block and we have fair value gaps and swings respecting the narrative. Does that make sense?
Yeah.
But
yeah.
all of this to say that it's framed on your higher time frame. So you're going from bigger to smaller. But but your smaller is based off of your bigger idea. You know what I mean?
Right.
That's what makes it like high probability.
Right. This is again daily. Okay.
Yeah, now we're back on the daily.
That the left. Yeah, it's clear. This one would be clear. I just need to again. So the daily candle starts from what time to what time?
It starts from 6 to 5. There's a 1 hour gap in between where the market closes for futures. So from from 6 to 5.
6 a.m.
6
to 5
p.m.
p.m.
6 p.m.
6 p.m.
to 5 p.m.
to 5 p.m. Okay. So when I let's say that it's 6 in the morning and I'm looking at the daily candles, so that would be from the previous day because that day. So if it's 6 a.m.
the current
I'm
day.
looking in current day. Okay. So that means if I wouldn't be able to watch the daily, I need to watch the 4 hour
Yeah,
because I'm
but
watching.
yeah, but your 4 hour is just your daily split up into 6 candles.
Yeah, that's where I'm getting a little confused.
Okay, so go on the 4 hour, Paul. Go on the 4 hour.
Or even this one day.
Go on the 4 hour. Go at the bottom on your times, like where it says the date and stuff, and right click and put session break. Is this showing the daily? Yeah, this okay, so this is, see the separators? It's showing you the open and the close of every day.
We are on a daily.
Yeah,
Or
this is a
4
4 hour.
4 hour. Okay, so I see there is few candles in that.
Yeah, there's 6
hour.
candles in between. Every day has 6 4-hour candles.
6 4 hours. Okay, so that's why there is 6 candles in between.
Yeah, exactly. Yeah, and you're framing your narrative based off of that. Like the if you're expecting the daily to be a C3 expansion, then obviously the 4 hour will follow the narrative.
So that's my question. How do I know 6 a.m.? Because I'm still in the same day that the next daily should do the C3. That's where I'm
It's
getting.
it's the current day that's doing the C3. If like if day 1 and day 2 passed already and you're on the current day C3, then you're anticipating the C3 to expand up. That's
So
what
what time is it? Can you go on the daily and then go back to C2 to see what time was that? The one that we marked C2. Okay. So there, what time? So how do I see?
at the bottom it says December 18th.
Yeah. So that means that 5 p.m. is when that C2 closed
Yeah.
on a daily.
Yeah. And then
Okay.
it
And
opened at 6.
6 p.m.
The next candle
So
opened at 6. Yeah.
6 p.m. Okay, so that means that I'm already watching for C3 from 6 p.m., not from 6 a.m.
The open of the candle, well, you're anticipating it to be a C3, yes?
Yeah.
But it's
So
not
that
gonna
means-
it's not gonna expand right away right at the open. It's gonna create some type of like pattern. It's gonna create a swing
Right, to the upside.
to the
in this
upside, yeah,
case.
because you're anticipating already a bullish narrative.
Okay. So that means that if I see it starting to form that C3, that will be a safe expectation for that day that we're gonna finish the C3.
Yes.
Okay, but you wouldn't just bluntly trade it
I mean,
because it's formed.
you could bluntly trade it if you're framing this on the daily, like if you're catching a position trade, like if you're, you know what I mean? But like we're not trading positions. We're not trading based off of the daily
Okay.
candle. We're trading intraday.
Okay. I get what you're saying. Okay, so I would capitalize in between that day already
Yeah.
in between in the moment that is happening. Okay.
Yeah, exactly.
Okay.
Because the narrative is showing you already. Like you understand swing points, yeah?
Right.
So
Yeah.
if the swing is showing you candle 1, candle 2 already formed the manipulation sweep of the low, right? Then candle 3, obviously, what's the logical next step for candle 3 to do to continue its expansion?
Yeah. Expansion and continuation.
Yeah, continuation.
Okay.
Makes sense,
All
right?
right. Yeah.
So look at the shorts right after that happened. Look, and ES expanded up, and then NQ expanded up. NQ took the high, ES didn't take the high.
Where is that? And yeah, I see. And
And what do we
ES
do?
to
What do we do on the daily?
and then we reverse
How do we reverse?
because of they lost correlation, so we knew that it's gonna
That's one of them. And then what else? What is it forming?
it's a swing.
Exactly. So you have like as it's at that high, you would look at it and be like, okay, candle 1 is formed, candle 2, we have like a clear candle 2 right there. We close below the high. And we
Yeah.
have a correlation. So now we can anticipate candle 3.
Right.
So candle 3, you would anticipate it and then go on the lower time frame and find the 4-hour swing. You know what I mean?
Okay. Yeah. Yeah.
Find your
I'm getting
entries.
under-
It's gonna follow the narrative. And same idea, right? Because this is a daily time frame that this is happening. So look, it's gonna move for a few days. Look how many days it's been moving to the downside. You're still holding the bias shorts the next day and the next day. You know what I mean?
Yeah. Okay, yeah, daily is very important. I wasn't even using daily
It's fine.
so much.
It's fine. If you weren't using daily and it was working, you're still working in like you're still using the 4-hour, yes?
4 hour, yeah.
Yeah,
That
so
I was doing
it's the same thing. If you're using
15.
the 4-hour, then you're still using a higher time frame area.
Okay.
But
I was only using 4 hours, 1 hour, and 15 minutes to
that's
enter.
fine. That's fine.
And that was all, because 5 minute I was the 5 minute would confuse me a little because it would be a lot of movement inside the fair value gap, and then I was not sure, are we hitting or we're gonna pass through the fair value. I was a little confused with
Always
so many
look for swing points. Always look for swings.
Okay.
Always, because the market cannot change the directions without a swing.
Right.
It can't, like, engrave that in your mind that the market can't switch directions without creating a swing.
Right.
If we're going bullish and we want to see it go to bearish, the transition period between that is the swing point.
Okay. Yeah.
Always. Doesn't matter what time frame you're in. You could be lower time frame, small time frame, high time frame, doesn't matter. It always has to change with the swing point.
Right. And I see sometimes what confuses me is we change direction down, but then in the next candle we change again direction up, and then
Yeah, because then it's not an actual reversal. It's just like consolidating or just like, continuation back to upside.
That would be happening in the fair value gap. That's why I would get a little confused. Is it gonna become inversion or not? Because we just came to the bottom, to the middle, let's say, and then we changed direction to the top. But as soon as we changed, just crossed the middle, we are still in fair value gap. We changed direction again to down, and I was confused. Okay, where do I enter if we just keep changing up and down and up and down?
If you ever get confused on the lower time frame, just go up one time frame.
And that's why I ended up on 15 for my entrances, because they would be more clear.
Yeah, because the 15 is good too, because there's 4 candles on the 15 to make a 1 hour.
Mhm.
So it's more structured, like it's easier to see.
That's why I stopped using 5, because the 5 was confusing me, and on 15 most of the time I would find better entrances.
If you're comfortable with the 15, then use the 15, because the 15 is still really good structure. Like there's 4 candles that make a hourly candle. You know what I mean? Like think of it like that. The hourly candle is just 4 15-minute candles, and in that one single hour candle, you're gonna find the swing on the 15.
Right. The only issue I saw with the 15 is that sometimes between 9 and 9:30, the volume would be so big that I would miss a big move
Yeah, yeah.
in the next
You
15.
should already be positioned at that point, because it's like, if you have the proper narrative, you should already have the proper position. Because 930, most of the time, it does the manipulation. It creates an
Mhm.
SMT, like a small SMT inside the intraday, and then it moves into the direction.
Mhm. Okay.
But it's going to follow the
Okay.
narrative of the higher time frame.
Okay. I think it would help a lot if I can just do two times at least. And by now I'm doing it quick enough, so I'm not gonna take much of your time. But just to tell me, okay, am I doing it
Yeah. Like,
in a
what we're going to do is you're going to share your chart and you're going to do your analysis, and we're going to like look over
yeah.
it.
Yeah, exactly. So just to say, okay, here you skipped, you should have first checked on 1 hour, then to do this or something
Mm-hmm.
like that. So I know I'm not, I
Yeah.
know what I'm doing, but I don't know am I doing it proper way.
Yeah, I got you. I think
Yeah.
you're doing well. Like, it's just from what I've seen so far, like you're doing very well. You know, like, don't be discouraged. Don't think you're doing something wrong. Like, right now, you're doing everything good. You know what I mean? And
Okay. I got this courage today when I sat down and first three trades that I thought something will happen. It was like I never sat on the computer
no,
before.
it's fine,
All
bro. This is normal. This
three,
is normal in trading.
it took me like 3 hours to understand,
Yeah,
to get back
it's
to
normal.
understand.
Yeah. That happens. It's normal. This is
Yeah, that's
it's
why
part of the process.
if I had it written down, I could have just seen what I wrote down and get, instead of 3 hours, I would just see my in
Yeah.
case that I forget, I would just see, okay, this is the time frame. Because what I did, I opened 15 and I'm looking, and then I go to
No.
4 to confirm what I saw on 50. And
No.
in three
You're
hours.
doing the backwards. You're doing backwards. You
Yeah,
have to do the other way.
exactly. Okay. Yeah, let's just do that on the end. I can just try to form two, and the way I do it, and then you can tell me, okay, that's good, or do it this way or the other way.
Yeah.
That will help a lot. Okay. All right.
Paul, you still there?
Yo, yeah, I'm here.
Yeah, if you want to do the PDF first,
Yeah.
and then I can do. Okay.
Okay, chill. Let's continue with the PDF.
Yeah, big sidetrack. Hold on. I'm gonna go to the bathroom real quick.
All right,
All
sounds
right.
good.
BRB.
So, yeah, I'm just gonna continue.
Okay.
Asia is important to analyze as it can create the model for New York and London. Its purpose is to create liquidity above and below its session. So, what you would do normally is, you've been backtesting before, so
Yeah.
obviously you know what you're looking at, but pretty much we're just waiting for Asia highs and lows to be swept during London and New York and see the swing form uh, to take the setup, right?
Okay.
Let's say if Asia takes a form of liquidity, like let's say we have a low created from yesterday's low, but then today during Asia we create a swing off. So today's Asia sweeps yesterday's low. If that's the case, then we don't necessarily have to sweep Asia low. You get what I'm saying? Because we already swept previous daily low during Asia.
Okay.
Yep. Asia session is the first session which opens every new day and weakest of the main three: Asia, London, and New York. Asia builds liquidity before more volume comes in. So, you know, the main thing you just have to know is that um, most days you will see Asia highs and lows will be swept. So you just have to be patient and see that SMT and swing form, and then take the setup.
Okay.
Because almost every day will be the same. Almost every day.
Okay.
Session and kill zone, same thing. Asia suit model. This is a sell model. So purple Asia's building liquidity, accumulating buy and sell orders. Red, midnight open. London breaks out to the upside, manipulating the highs. And green, New York will continue or reverse based on the reaction. So in this case, New York, we you know uh, we continued from London, right? But sometimes New York can continue higher, and so
Okay.
you know
And where would usually bounce from if it's gonna go higher?
we can bounce up from here, we can bounce up from here, we can bounce from here, anywhere. It really just
Any
depends.
internal liquidity in this
Yeah, it
case.
depends on the context. In
Okay.
this
All right.
case, we swept previous Asia low, and we're like sitting down here, but every day is different, right? But the general idea is the same,
Okay.
right? This is an example of the daily cycles. And so,
Yes.
first example, you can see Asia consolidation, London manipulation, and New York reversal. And so, that's usually what we look for. But then, if you see the second example, it's Asia expansion, London consolidation, New York continuation,
Yeah,
right?
the one that
So,
you just
there's going to be different profiles where each session is not going to be picture perfect, right? So
said.
you just have to be aware on how the market behaves after sweeping liquidity, and then see that swing in SMT form after that, and obviously CISD, FEG, and OB as well.
Mhm.
Example of bullish order flow. So as you can see, we're coming up, and then we're consolidating down, we're retracing down. Once we retrace down, we had a hit displacement or something, and we have this bullish reaction to the upside again. And then
Okay.
we pretty much have a CISD to the upside. Think of break of
Right.
structure as CISD, right? So we have
Right.
a CISD to the upside, and then after that we created this low and then pushed up higher. Now this low became our internal liquidity. So what price does is we came down, hit the order block by sweeping this internal liquidity, and then have another bullish reaction to the upside. So this is what you would expect in a bullish market, bullish
Mhm.
trending market. You would expect to see something like this.
Okay.
um, Example, bearish order flow. So as you can see, we're coming down and we're retracing up. Same thing, but in reverse, right? This is a little bit more complex, but this is exactly how the market's going to look like. It's going to look complex. But if you
Mhm.
break it down one by one, step by step, it's not complex. It becomes easier, right? Um, as you can see, we have a CIT to the downside, come back up, sweep the internal, hit the fair value gap, hit the OB, creates a swing, and then dumps down again, creates another
Okay.
CISD. And then what does it do? What does price do? Come back up, hit the internal, hit the order block, fair value gap combo again, creates a swing, continues down lower. So lots of manipulation in this picture, but that's just how the market moves. Like we manipulate highs and lows for it to go into its true intended direction. Like so, you know, wha- in order for us to go down, what do we have to do first? We have to sweep a high, right?
Right.
In order for us to go up, we need to do what? Sweep a low.
Keep
And
below. Yeah.
so
And it
every day
can
is the same. Yeah.
internal or external low or
Yeah.
any
Exactly.
low, but it has to be some type of liquidity before we also change direction.
Exactly.
Okay.
So yeah, just more examples of bullish bear shoulder flow. We swept this equal high slash internal high, and then what do? Price then shifts towards downside, trying to take out all these internal lows. So this is something that you can just refer back to
Mhm.
time to time just to see like, okay, this is what I'm looking at. Like this is how markets can go and react. And so this is just a good example, like I like to look at time to time just to see, okay, like am I following the model? Am I, stuck in liquidity? Am I not looking at the higher time frame?
Mhm.
Um, Same thing, but in reverse, right?
Yeah.
Equal highs are swept, and then what do we target? All the lows, and then after we
Mm.
target all the lows, what do we do? Target all the highs.
Nice, yeah.
So it's like moving in a wave, up and down, up and down, but you know exactly where the target is when it's going up, when it's going down. So why do we utilize Asia session? Just by looking at this bear chart, we don't know what we're looking at. But if we have a Asia session, we can easily tell like, okay, where is their liquidity lying? Okay, for in this case, uh we're rejecting off the Asian low here,
Mhm.
right?
Yeah.
But then the very next day, we swept Asia low, created
Yeah.
order block, and then during New York, there was another entry for us to
Uh-huh.
enter. So just keeping it very like mechanical. Like, okay, do we sweep the low? Okay, then no. Well, then we can. If we sweep Asia highs and lows, then we can look for a setup. But if it didn't, figure out why we didn't. Because and in this case, we didn't sweep the low, but it still bought up. That means there could have been an SMT on the other asset to where, okay, S&P swept the lows, ES swept the lows, but NQ never did, right? So
No.
we have a bullish SMT to go up.
Okay.
Yeah. So same thing here. We utilize Asia box because of this, right?
Yeah.
It's very easy to tell, okay, where we can go next. Asia high
Right.
swept, dump. Asia high swept, dump, right? Asia low swept, buy.
Yeah. Bye.
Asia high swept, sell.
Yeah.
Asia low swept, buy, high sell, low buy, you know. But sometimes it will not do anything like this day.
Right.
But
You didn't
it's
sleep.
just it's building liquidity. You know what I'm saying? So in the
Right.
future, we may take out the high and then dump again, right?
Mhm.
Uh in this case, we just swept the high and then dumped. So here's a question for you. Do we go up or down based off what we're
From
looking at
where?
here?
On the last one,
Yeah, like
on the all the way right.
where are we gonna go, up here or down?
We're gonna go to the London's high probably from
So
there.
we're probably gonna take out these highs, right?
Yes. Yes. Because we just swept the session low. Yeah.
So you
It
you were
will,
actually incorrect, brother,
yeah.
but it's fine.
So even though we swept the session low there on Asia, it still didn't go. You see there, we have a sweep, right? The
Right
last one.
here, we don't have a sweep. No.
No, no, no. I mean, I was watching all the way down. Yeah, there. So on the bottom, isn't that a sweep of the low of
Yeah,
the
we swept the
session?
low. Yeah, we swept the
Yeah,
low.
and that's where I meant. So after that, I would target. I expected it to go up, and it didn't.
But we're already up here. I'm talking.
Ah, okay.
What
We
are we
did.
doing after here?
Ah,
Yeah.
okay. So now we are sweeping a session high again. So we expect it to go down
Yeah, exactly.
from.
But
Yeah.
in this case, we never swept this high. We never swept this Asia high,
From
right?
where?
We never swept it here.
Ah, okay. I
We
see.
never swept it. Do you see it?
Okay. Yeah.
So notice how we sweep it during this day. So
Uh-huh.
look, you see the difference?
Yeah, so we swept. We didn't. So why? So we are even watching the previous Asia session, not just
Yes,
the
yes,
the.
yes, yes. All the previous Asia sessions, they still count. Yes.
Okay, let me write that down. So all or just one?
I mean, as far as you can see, bro. You know what I mean? So I would say, all Asia session highs and lows, because what happens on the next day, right?
Okay, count.
This Asia session high becomes our, target. You get what I'm saying?
That would that be a previous daily high?
No, previous daily high is up here.
Okay, okay.
This is
Okay,
Asia
and
high.
then Asia is so Asia is that's a previous, and then where is the previous daily low? On the
Right here.
that one. Okay, so the lowest point. Okay, so let's go again. So there we didn't sweep there we didn't, and then on the right Asia. So I was right that after sweeping the low there, we went up,
Yep.
and then I would just target the session high for that day, right? Or no?
No, because you don't know if we're gonna go that high, right? And
Okay,
what is the market telling us? This is it's that N shape, right? Uh, it's like that swings formation. It's like C1, C2, C3. You get what I'm saying? Like we're setting up to go down, right? Notice
okay,
how we swept all these highs and we're trying to go lower, 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 lower. So
okay,
this is what I would have done. I would have anticipated this low to be swept, and
okay,
then uh, look for a manipulation of a high. In this case, we could be manipulating this Asia high. We could be
okay,
manipulating, this equal high up here, or it could be
okay,
even coming up all the way up here.
okay.
But in this
Yeah,
case, we
in this
came up
case.
and liquidated the Asia high, including this New York high as well. So Asia high, New York high was liquidated, swept, and then we created a swing to go where? To go lower,
To go
right?
lower. That will be in kind of in London time already. Or
This is New
yeah.
York.
So that would be
That's 10
already
a.m. for sure.
Yeah.
10 a.m. Okay.
Because
All right.
London swept the lows of Asia, right?
O- Okay, okay, okay. Okay.
So you need to like think in terms of like a bigger picture. Like where can we target based off where we're at? Don't just look at the session highs and lows that we're on. Look at the previous session highs and lows. It
Mhm.
may not even be yesterday's. It could be 2 days from before. You know what I'm saying? Like all those highs and lows are valid for you to check into, and see if we're gonna have a reaction off that. And so
So the thing is, I also hear now. So we see that on the um, previous downside, we created a fair value gap, and then we have also confirmation where the price is on the it's so yeah, that's also what I need to understand. From where do we watch the order blocks and fair value gaps to respect? Let's say in this case, I can see the when New York started. So the first big black one where you told me the New York swept the high. Yeah, that one. So the next one is hitting the fair value gap. So the next black that is
this
under the other one, the next one.
this
That one, if you see it hit exactly in the
this
fair
one.
value gap, yes. So how did I know that I can also watch for that? Is that
Well,
was that
the higher time frame narrative is bearish because we're like the higher
And
time frame from
also,
this is creating a swing, and we created look at the V shape. It's a manipulation, and we
yeah,
created
I
a
see that.
swing, and then that fair value gap that you're talking about,
Yeah.
that's an
it's
inversion.
invalid. Also,
It's invalid or valid?
I would not use this. No, I would not use this.
And you see,
because-
it's kind of in the same. There is an order block on the session Asian sweep of the low on the last one. That's an order block that actually also confirms the tap, right? The left one, the that. No, go back, down, onto the right. Yeah, that order block, those three down. So I see that. Yeah, that one. Would I use that order block to enter if I miss the first move? The first when it swept the New York on the right. Yeah, there. So let's say I
No,
missed that entrance.
I would not use that, brother. No. The only order block that I see that worked out was this order block. This green candle. This is a correct order block. You see how we
Oh,
tapped it?
and it's even further back down. So it's really, there is no limit to how far back I can look when it comes
Just
to.
look in the terms of where we're at and how far we can reach up to, right? In this case, we're right here. This is where we're at, right here.
Right.
Okay. Where is the nearest order block? Where is the nearest liquidity? It's up here. This is our nearest liquidity. This is our nearest order block. So I'm anticipating we can go up, sweep this, hit the order block, and then dump. Make sense? So
Okay. So
That's a manipulation.
closest to what we are expecting.
exactly.
Just as a
Closest to
as a rule of thumb, just try and keep 3 days back in terms of like sessions and liquidity. Like 3 days is good.
Okay.
well, sometimes
Three-
it can be more like weekly, weekly order block or like so just have an idea of like
But I'm talking about intraday.
yeah, I know, me too.
Okay.
But
Okay.
like your weekly order block, you would already have it on the. It wouldn't even be visible over here. Like
Yeah, but like you can still have like lines marked out,
yeah,
of, like,
but keep the
open.
rule, keep a rule of 3. So like even higher
Yeah,
time
3
frames
days,
would
yeah,
be
yeah.
like
3
so
sessions.
same as like on the weekly it would be 3 weeks, or on the daily it would be 3 days, or on the 4 hour it would be
3
three
sessions.
sessions, yeah,
Yeah.
or 3 sessions, or 3 days. Like in this case you could use 3 days, so 1 2 3 3 of those Asia sessions. That's how far back you're looking back.
Okay, and now it's a little bit more because again, now I understand why we wouldn't watch the order block that I mentioned, which is
This is
yeah, because
yeah, I would
now I
not
understand, because what you said, because once we are pushing already from that up, we are looking at the closest order block to where the price we are expecting to go. So that's why we are watching back to the one with the green one, because
and
that's
also yeah, exactly, brother.
okay.
One
Okay.
more thing I wanted to add is that the the bias, the conviction that we have is bearish, right? So why are you looking for buys in first place? You know what I'm saying? Like you shouldn't be looking for buys because the bias is bearish. This indicated that
Mhm.
we're gonna go down, right? This whole bearish movement because it's closed below all the structure. Like this confirms like
So that's a chain
CIST to the downside. You get what I'm
doing
saying?
higher highs and higher lows, and then there we switched from higher highs to higher lows. We pushed and created a lower low, and
Yeah,
that tells us that we are switching the bias into bullish.
exactly,
Bearish.
exactly.
Bearish. Okay.
Yep.
I see now. I see.
So we have higher high, higher low, higher high, higher low, higher high, higher low, right? It's like we're
Lower
making
high.
bear structure.
Lower,
Sorry,
yeah, lower.
lower high.
Yeah.
Yeah, my bad. So
Okay.
we're not making higher highs. We're making lower highs, consistent lower highs, while breaking structures to the downside. So our bias is bearish. There's no reason for us to look for
You can
buys,
also look at it
right?
in terms of the range. Look at the range.
Yeah, look at the range too. Yeah,
Look at the range.
Range.
The swing to the
the
swing.
high to here. Yeah,
Ha.
from this swing to this swing, right?
Okay. And what am I looking at that at this? If I see the
Yeah, from look at it from this range,
From
right?
that swing
From
point to
this
that
high
swing point.
to this
okay,
swing point. What do we see here? What
That's
is
internal.
this? If this is, yeah, exactly. So this would be internal, right? Between the two external points.
right, right,
So this would
So
be internal to external setup.
internal to external. Yeah, exactly.
okay,
Internal to external, and this is a New York reversal sequence.
okay,
Because all day Asia, London, all we did was set up the New York to push down. We just built
Yeah.
liquidity for New York to push down. Because we're higher time frame, we're in a bullish, in a bearish scenario.
right, right. So it. What would you say? So the first thing when I open, I supposed to see in which are we
What your
bullish or
bias
bear?
is? Yeah,
That,
what's your
okay.
bias? Based same
Let
way
me
that
start.
we looked at on the daily time frame. You remember, like we looked at the swing daily time frame. Well, your bias would be bullish in that scenario of what we looked at.
Okay.
So
So
now you're
first,
framing the lower time frames based off of your idea. Okay, well we're bullish on the daily.
first confirm bias.
Yeah, confirm your
Okay.
bias on the higher time frame. Look at the previous session. Also, it did the same thing.
It did the same thing. Yeah, we
Paul,
went from
look at the middle session there.
Oh yeah, this one.
Yeah, it did the same thing.
yeah.
Yep. Same shit all over again, bro. Like every day. It's always the same, bro.
We manipulated
Almost always.
and then expanded away from it. Manipulated, expanded away from it.
Yeah.
Yeah. Okay.
So we always trade away from the manipulation.
Right.
Yeah.
Okay. Okay. So first confirm the bias, and then we go to daily time frame, then 4 hour,
Then 1 hour.
and okay. So let me put that first, then daily 4 hours, 1 hour, and then for the entrance, for entrance 15 minutes and 5 minutes.
Yeah. So think about it like this, okay? You have your daily,
Okay.
right? And then your 4 hour is going to be a swing based off of the daily. Okay? So then once you have your swing found for the 4 hour, so for example, your C1, your C2, C3 in the 4 hour, then the 1 hour is going to be the swing of that 4 hour candle.
Mm-hmm.
Does that make sense?
Yeah, but it would be easier with the visual.
Yeah. So Paul, open up a chart real quick. Go, just open one chart. Okay, so for example, daily, go on the 4 hour.
Mm-hmm.
So you find, for example, like even Friday, you have your 4 hour swing right there. And then go on the 1 hour.
4 hour swing.
Yeah. So you see how we'll go back on the 4 hour. Draw out some indication to show the C3. So it's just like a line. Yeah. Just so we can now go back on the 1 hour. So now you see how you have a swing inside the swing.
Mm.
So you see how you have you had the 4 hour C3, and now you have another swing here showing the 1 hour swing.
Yeah.
Well, that 1
Yeah, I
hour
see.
swing is inside that C3 because that's what you're
Let me-
confirming on the 1 hour.
Wait, I don't see the difference there. Let me see. Let's go back on 4 hour. So 4 hour, that would be because it doesn't change the big one. That's what I'm getting confused now. It doesn't break the big one into smaller.
But yeah, look at
Alright.
the swing on the 1 hour.
So
You see the C2 on the 1 hour now?
C2. Okay. And where is where is that on 4-hour? Is the same.
Mm-hmm.
That's why I'm confused. So it's the same.
Go on another example. Check a 4-hour. Like take any swing, it doesn't matter.
Okay, that's a 4-hour. Then 1 hour.
Now you have your 1-hour swing inside that C3. You see?
Yeah, yes, now it broke down the big big.
It's probably because
the
that on Friday it just moved very quick.
Mhm.
So it was a bit more confusing. But this, like for example, you're breaking down. Well,
Okay.
your 1 hour is based off of your 4-hour. Does that make sense? Because it's going to be a swing inside that. So as the 4-hour is forming, your 1 hour
Okay.
will create the swing
We made the swing.
of the 4-hour candle. But you're isolating that candle because you're expecting that candle to be an expansion.
Okay, so if I'm waiting C3 on if I have C2 ideal formation, let's say, and I'm waiting to enter on C3 to not miss it, I would go down to 1 hour and
Yes.
wait for the swing.
Yes.
And that's how I would catch the C3, which is 4-hour expansion we are waiting.
Exactly.
That's what you're saying.
And how many
Yeah.
1
Oh.
hours do you have in that 4-hour?
Well, 4, so I can
Exactly.
catch 3 hour, literally 3-hour movement
Exactly.
if I catch.
Yep. 100%.
And then I break down even lower on 15 minutes,
15.
and I can break down that first 1 hour of the
Exactly.
first
Exactly.
of the
So go on the 15-minute real quick.
Yeah.
For this chart. So now on the 15 now,
Mhm. Let me see.
same idea.
So the-
And look at
order-
the fair value gaps and order blocks respecting.
yeah, that's it. I
Makes
see
sense, right?
clear. See clear fair value gap. So even I could go from the order block itself there, or I need to wait fair value gap.
You could
to
go
be-
from the order block itself.
order block. Yeah, because I see we have it before the fair value gap. So I
Because that fair value gap, it's probably the C3 right there. Like it's just a continuation there. And it's already
Continuation, okay.
confirmed too.
All right. Okay. So is this how we do for every trade?
Yes.
This is how we break it down. So
Yes.
we don't change this. We
No.
first
No.
find it. Okay.
Yep.
Good.
Every trade.
Okay. Good.
Because you're framing the 1
Every
hour.
trade.
You're framing the
Every-
4-hour. If your 4-hour can't be framed, then you just go down on the 1 hour. You know what I mean?
That's what I need to. So those are I need to arrange that in my head. So
Always
I'm
big, from
basically-
big to small.
So I'm basically trading. The safest is to wait at least 4 hours to be on C2 to catch
Yeah.
the trade.
Yeah.
But the way to see it earlier would be to catch it on a daily C2, and then I can expect the C3 on a daily, which would be visible in the first 4 hours of the new day. If it starts to go up, let's say we're waiting bullish.
Yeah. It doesn't necessarily have to be in the first 4 hours of the day. It could create the swing like intraday. Like let's say London could sweep it and make the low of the day, and then by the time it hits like for New York, it'll like be the continuation.
Okay, and is there any time that you would just come in let's say 6 a.m. and you would just open 4 hours? You wouldn't go on a daily?
Well, I would
Or
I would already have my bias for the day. Like I would know like where am I going on the day? Like where am I on the daily?
So
'Cause-
you would still check the daily. Okay,
Yeah,
that
of course.
was my
But I would
Okay.
also check the weekly too, because I'm trying to figure out for the whole week what's happening on the weekly candle for the whole week. You know what I mean?
Okay.
Like
Okay.
like go on the weekly real quick, Paul.
And would that be on the beginning of the every week, or you
Yeah.
would do that every day?
Every day pretty much. I'm looking at where am I on the weekly? Because look
Okay.
at the weekly candle, the current weekly candle. Like zoom into it. So this is the current weekly candle, yeah?
Yeah,
Now,
we have
now,
a C2.
now go on the daily. Now look at how the weekly broke down.
Right.
You know what I mean? Because we're just doing the continuation. So yeah, like it's following my weekly narrative based off of the dailies. Because it's the same logic that you're doing from the daily to the 4 hour. Now I'm doing from the weekly to the daily.
Okay, can you do it again? Again, so weekly.
Go on the
We
weekly.
saw weekly. I would here say that we have creating a swing that is a C2 C3 expansion,
Yeah.
and it's a ideal formation. So I would expect to next week that we continue going down,
Yes.
and it would. I would think that it will go until that liquidity we have sitting on the left, that
Yeah.
one
Yeah.
at least.
Yeah.
And since we have the V shape also confirmed now
Yeah.
on a daily, that's a extra confirmation that
Yeah.
it should go down. Okay. All right. So that's what you would first come and see. Okay. On a weekly, we are most likely to go down.
Yeah, because I'm
to the-
framing it based off of the week. I go week by week, right? So like I'm thinking, okay, where are we gonna go on the week? Am I bullish or bearish?
Okay.
You know what I mean?
Okay, I see.
And then I could go day by day from that weekly idea. You know what I mean? If everything follows through, then the 4 hour will just, it'll just align. It all connects together.
Right. So in this case, the daily after we saw that C2 daily should start forming the C3 of the weekly, which is going down. And if I see that it's forming, I could follow that.
Yeah. So Paul, can you draw a line on the open of the weekly?
That's a weekly.
The open. Okay, now go on the daily. So this is where we opened. You see?
Open meaning started a week,
Yes.
new week. Okay.
So that's
And
Monday.
then
See the Monday open?
Monday. Okay, and those are days.
Yeah,
So
those
every
are
day.
days.
Yeah, and so we could easily expect those days to be. So at least I would know my bias is
Yes.
bearish.
Yes, exactly.
That's why I look at the weekly.
And
so
now
I can say,
look at the 4 hour now.
right. Let me go to 4 hours. Okay.
So look at the whole week's range based on the 4 hour. Look at all the swings that are forming.
Right.
And how the narrative is playing out for the week. Because you know that the week is bearish.
Bearish.
And you know that the days will have to follow the bearish week.
Right. So I wouldn't necessarily take the buy trades this
Yeah,
week.
there's no point in taking the buys. Because look at the buys. The buys are setting up for the shorts. We're just retracing. Those are just retracements on the buys.
Yeah, because we have a lower low, lower high.
Can you show me all the 10 a.m.s, Paul, in that weekly range? Show me all the 10 a.m. candles, 6 and 10 a.m. candles. So just do a vertical line. Like Control V or Alt V, I forgot which one it was. Not a line like that. Like do a straight line up and down on the 10 a.m.
Oh,
Control V or whatever, like Alt V, yeah.
10 a.m. So every 10 a.m. we actually
10
went
a.m.
down.
Exactly. So you have the continuation of narrative at 10 a.m.
Oh,
See?
Okay.
And some days
Okay,
it's 6 a.m. that already starts it, And 10 continues.
Okay, so let me first confirm bias on weekly.
This is a bad week, by the way, because we had like a break. So there's like a day missing or whatever.
I mean, still respected.
Yeah, still respecting. You see what I mean? Like the narrative is playing out for your bias that's on your higher time frame.
Yeah. Okay. Now I understood. Why.
Now think about it on the monthly basis. Think about it on the monthly basis now. Same idea.
Right.
Now look at the monthly.
Monthly. Let me see. So on the monthly, we are Let me see. That's okay. So we had created a swing, but here we're. Let me see. So this is a also C2 C3 reversal, but now I wouldn't really know. Are we gonna hit the? Are we gonna continue down
I think we're gonna
or up?
continue down.
I wouldn't really see.
Look at the range that we're in right now
Let me see.
from the monthly. Like if I tell you like find the range, would you be able to?
What is range again?
From swing point to swing point.
Okay, yeah, I see. So it will be the one down, where is the last swing, and then the one up. Yep, that's the one, and then
Yeah.
that's the one.
So that's the
Yeah.
monthly range that we're in right now. Right now,
Aha,
you know what I mean? And
that's
like it's
how
just
would you decide that that's a monthly range.
well, it's from swing to swing.
On a monthly time frame.
Yeah. I'm just showing you the monthly range. Like this is just the monthly range.
That would be the monthly range. Okay, so it would be then how? Okay, so it's the most recent low and high.
Swing point.
Swing point, yes, most recent swing points of highest and lowest swing points.
Yeah.
That's a range.
Because we had the internal and it pushed up, and now we're like at the top pretty much of the expansion. Because look how many months we've went up. 1, 2, 3,
Yeah.
4, 5, 6, 7 months. So now we can expect some kind of retracement back inside the range.
Okay, and then how would you know if we create now a swing in right there and we push through that swing up, that would break the range and create a
Yeah,
new
it would
range?
create a new high of the range.
High of so only high. The low would
Yeah,
still
the low
be
would
this.
still be the low. Yeah,
Okay, so then so
because that was the last low that pushed up. This was all year, by the way. This was like all 2025, pretty much.
right.
So
right.
you can even look at it from the yearly candle too. You know what I mean?
Right. And this monthly would confirm us that what we are seeing on the weekly, that we are bearish. It's also a good confirmation because it's from the highest swing
Yeah.
on the monthly.
Yeah. There's
Okay.
also an SMT at the highs, by the way, like on the monthly. Like that's also a reason why I'm thinking like this is the high.
Can you show me that SMT?
Yeah. Paul, do a side by side with NQ and ES.
Okay, and so here we didn't sweep the previous high, and
So-
there we're gonna see the sweep of the previous high.
Yeah, you see?
We should see. Let me see. So where is the sweep of the previous high on the
Show me.
ES?
Show me the sweep.
The sweep of the previous high.
You see the sweep?
No. So wait, are we watching sweep on the high or low?
A high, obviously. The low already
High.
happened.
Right. Okay, so I don't see that it swept previous high on S&P.
Where do you not see that? You see the previous candle's high being swept?
Yeah, I mean I see the green one has the higher wick than any of the next bearish ones.
Okay, what about the next candle?
The next one, the first black one,
Yeah.
it didn't sweep the high.
Okay, what about the next one?
Oh, so we are just watching. I was focused on sweeping the green high, but we know is the previous candle high. Oh, okay. Yeah, I was watching the wrong candle. Okay.
So now we have an we have an SMT right there.
Last candle wasn't.
So you see the two previous months now, like the lows of the previous months.
The lows of the previous month. let me see.
The previous 2 months. So see those lows? For me,
Yes.
that's the liquidity being built up. You see all the
Mhm.
lows, all the liquidity being built up.
Yeah, there is a lot of liquidity. Yeah. Yeah.
So that's what I'm aiming for pretty much the next 6 months.
Okay. Okay. It makes sense. Yes. It makes sense to go at, so you would target one by one, especially those double tap
Yeah.
almost. That would be the first target at least to expect
Yeah.
when it
Because
okay.
ideally, what I would want to see is price come down back to the order block and then continue up on the monthly basis.
Okay, which would be okay. I see the order block and I
Like
see
that.
the
Yeah.
fair
So then it would be internal to external.
okay, and I see also the fair value gap on both. Okay.
So when I
Okay.
say internal to external, it's relative to the range. Because
Okay.
it's internal range liquidity, right? Or external range liquidity. Well, now we created the range on the monthly. Now I'd want to see it come into the internal, and then from the internal, we go to external because we're bullish. We're still bullish on the frame, on the structure.
Right. I
So
see.
makes sense. So now
Yeah.
for the monthly candle, look at the weekly, Paul.
Yeah.
So now a monthly candle has 4 weekly candles.
Right.
You know what I mean? So now you can
Yeah.
anticipate the next 4 weeks, or like what's the framework of the week? You know what I mean?
Yeah. Because we saw there that it's it was on the monthly
Yeah.
of the previous high, so we expect it to go bearish, and then we can catch it on the at least 2-3 weeks of bearish before
Exactly.
we hit the order block.
Yeah.
Okay. Okay.
So look at even this, even on the weekly here, we have an order block. We're still holding that order block on the weekly.
Which one?
See the
Let me
high,
see.
the highest candle? See there's a
Yeah.
gap?
Yeah, there is fair value gap. Yeah.
Yeah. So that means that the order block is right there, that candle.
Okay. Also, yeah, because we have changed state of delivery there, going down. So that will be also an order block. Yeah. So that's a fair value gap and order block.
Yeah. So we're just respecting that and we're creating swings there on the weekly.
Mhm.
But think about it like it's a weekly time frame, bro. You have a lot of time to anticipate and to frame your trades. Because
Right.
then on the weekly you go down to the daily. Like go down to the daily. And we're still creating, look at those swings that we're creating. And we have an SMTs too. Like that's another element. Like look at the swings that we're creating on the daily and we're pushing down. You know what I mean?
Yeah.
Like think about how many days you have to plan this
Yeah.
and anticipate it. So now go on the 4 hour. Like this is where you're going intraday. Not now. Like does that make more sense?
Yeah. Yeah. It's not easy, but because I didn't do it yet, but I see the idea.
Yeah.
And I can see to enter off of those swings to catch the bearish. That's what we are
Yeah,
expecting.
because you're
And
already holding the bias to be bearish. It's following the bearish narrative.
right, so I wouldn't necessarily choose this week or this month to do bullish until we hit the order block
Mm-hmm.
at some point on the higher time frame.
Yeah.
Okay.
But I'm just showing you like the monthly. You know, I could even show you the yearly. Like go on the year, Paul.
12-month.
Like this is the 12-month, right? Look at the previous year. What do? We opened up. We hit the order block. We swept the low.
Yeah, we hit the order block and went up.
And we sweep the low there. And now
Right.
it looks like we're creating a swing. So I can anticipate this new candle now for the year to come down, create the wick, respect the swing with an order block, and continue up for the year.
Right. But we expect bearish until we hit that order block because we are in the swing now.
We already hit the order block.
Right, we did.
So now we're creating a
Right.
swing. That's C2. Now I'm expecting C3 to be created.
C3. Yeah.
So the wick of
Yeah.
C3 and then the expansion up for NQ.
Yeah.
So yeah, we might be bearish at the beginning months, but then I can expect us to expand back up to create new highs
Right.
for NQ, you know? And
Yeah.
see how it aligns with the 3 month. 3 month is a quarter. So there's 4 quarters in a year.
Yeah.
Makes sense, right?
Yeah.
So
Perfect
now
sense.
look, we even have a range here on the quarter. I can expect us to come back into the range. Now we have an order block that's closer into the range, and we can like from there make the low, create a new swing, and then expand up and create a new high on NQ.
Okay.
And check the monthly. Still aligned with our framework, you know? Internal to external. That's what
Right.
I'm anticipating, you know. That's what I want to see until it shows me otherwise. But right now, that's what I'm framing, you know, for the next year
Right.
on NQ. But you don't even have to do that. You can go buy it from like the weekly and the daily, week by week, day by day, you know. This is more advanced stuff, obviously. Like
Right.
I'm framing the whole year, you know.
Yeah. But yeah, it helps to know why we use these big time frames, because
Yeah.
if I'm expecting on a weekly bearish, I can just go quickly check does monthly also.
Yeah, does it
look bearish.
align?
Does it, if I'm on the monthly on C2 expecting C3, and of course then my weekly is
It has to create swings and push down. Yeah.
It's even better confirmation that it's gonna be bearish. Okay.
Yeah.
So I don't necessarily have to use it,
I'm just
but
showing you the logic.
once I have my let's say something that I'm waiting, I can just go back and double check it through the monthly and okay. All
Yeah,
right.
to see
Yeah, I
if
did
it's
it
following your
without.
narrative.
I, I did those trades without even checking weekly.
Yeah,
I would
exactly.
just have
You don't even need to. You don't need
Okay.
to. It helps you. Like I would.
Right.
You know, I would suggest
Right.
you would too, because it helps you figure out the narrative for the week and the day and all that. Because that's what
Right.
you're aiming for, right? You're aiming for higher time frame setups. That's where the money is, you know?
Let me just. Sorry, it disconnected. Give me 1 second.
No worries.
Okay. Here it's here. I'm just switching to my phone. Yeah, I'll show you on the end how I was doing it. I mean, you saw it worked, but it's okay. Good.
Because you're still following the same logic. It's still it works because you're using the same logic that we're using. You know what I mean? Like even the higher time frame, it's not any different than what you were doing on the lower time frames. Like it's the same exact thing. Same exact thing, but now it's just about positioning yourself in terms of time, because time is more important than price. It's time then price. You know what I mean? Because even think about it in terms of the intraday. You're waiting for specific time. You're waiting for price to set up at a specific time, like 6 a.m. candle, 10 a.m. candle. That's where you want to see the injection of volume come in, and you're set up to continue the narrative.
Right. I wasn't. You see, also what I wasn't doing is following the 4 hour. I was watching 4 hour time frame, but I wasn't aware that I'm watching. Okay, 6 to 10, 10 to. I was just not aware of that.
Yeah, just keep in mind this is something that you have to memorize, like the time frames for the 4 hour, the times, like 1800, 2200, 2 a.m., 6 a.m., 10 a.m., 1400. Yeah, I'm gonna write it down for the beginning, so I have it in front of me until I get used to. But you see, I was watching 4 hour time frame, but I didn't know actually from what time to what time I'm watching the candle. I was just watching the candle, if that makes sense. Yeah.
You know, and
it's still following the logic. You know,
following the logic, but it would help a lot that I knew. Okay, this is the time that I'm expecting. Okay, 10 is starting.
Yeah.
If I'm waiting the C3, I know, okay, 10 o'clock is a big opportunity.
Yeah.
And where I wouldn't even know before, I would just look at it, okay, it is an opportunity, but I would not be aware that, okay, this is where it starts.
Yeah.
I wasn't.
Those hours are important because they're the open of the new 4 hour. So like that means it's a new 4 hour open, it's a new 1 hour
That's
open, it's a new
what I
15-minute open, new 5-minute open. You know what I mean? Everything under 4 hour,
Yeah.
it's a new open candle for all of those.
Yeah, that's why I need to know. Now I understand that I don't even know how I did it without that.
Because you're still
Um,
you're following the logic still. That's why.
Yeah. Okay. All right. All right.
Good.
Yeah. We can continue.
Yeah, you're pretty
How
much basically almost done.
how long do you
Alex.
guys want to go? By the way, we've
Yeah,
been
we
going for 2.5 hours.
Yeah, because mostly now I had the questions that I didn't know how to form before.
Oh yeah,
So
yeah. So what are your questions?
yeah.
Let's go through your questions.
Well, these were pretty much. If you want, I can open a chart, and as I'm doing one, I have these questions that I wrote down that
Okay.
I can just ask you as we go. I can first ask you like this, and then I'll open the chart. Let me just get to my questions. So the one that you answered already, how long into the back we go for respecting fair value gaps and order block? You said to keep it 3 session back.
Yeah, three.
Uh,
Yeah, 3 sessions back. That's good
3
enough.
sessions. Okay, so that we
Well,
answered.
3 days back.
3 days. Session. Okay. Let me put days so I don't get confused later. Okay, then from what the time frame to start, you already answered that, and now made it very clear.
Okay.
Which pairs go together? For now, I wrote NQ. Look at ES,
Yep.
and then should I just stick to these two for
Yeah.
the beginning?
Stick to those two for the beginning.
Okay. How to enter was one of my questions. Because so far I didn't do an actual entry, and that we can do now on share screen. Because yes, I would expect to enter on the beginning of set C3. On let's say I'm waiting it on 1 hour, but still I would need at least one time to show me, okay, this is actually exactly where you enter.
The entry is not the most important part because the narrative is the most important part because the entry will just like on the lower time frames it'll just follow the fair value gaps and order blocks according to your narrative.
Okay.
Does that make sense?
Yeah. I'll go over it now on the chart again. Do I make daily low and daily high every day? Yeah. So I was also getting confused when to remark my daily high and daily low. On 6 p.m. I can go and mark the previous day because
Yeah.
6 p.m. starts the new day.
Yeah.
Okay, so let me write that down. Every 6 p.m. mark new daily low and high. And then for the weekly, how so every Monday I would go and check my weekly lines.
Yeah.
Okay, and the only reason why when that would be different, I guess, if I would see in the middle of the week we swept the low and let's say we continued through the weekly low, that mean that I'm still looking at those weekly lines, or I need to do something else?
I mean, what do you mean? Like if we go through the previous weekly low, for example, we keep going down?
Let's say it's Wednesday and I marked on Monday. I marked
That would
weekly
just be a
lows.
target. That would be your target.
Okay, so I don't need to go and remark something. It's still, I'm not changing my weekly lines until next Monday. That's it.
Yeah, yeah. But like for example, your the same rule applies for like the weekly, like keep the number 3 in mind, right? So like if you look back 3 weeks, there's going to be 3 lines for the previous weekly lows. It would be the previous weekly low, and then the previous weekly low, and the previous weekly low. You know what I mean? Like you're going to have 3 targets. There's 3 lows.
So I leave the lines of the 3 weeks on my chart.
Yeah, I mean, you don't have to. You just keep in mind of where it is. You don't have to really mark it out because it'll react off of the previous weekly low. Like you're going intraday. You're not going like
Right. But now I understand. The only time I would check if we would push Wednesday through the weekly low.
yeah, and then
And now
your
I'm
next
thinking,
target you could
okay,
maybe look at the other
Right.
week's low. You know what I mean? If we keep pushing
Right.
down, maybe it's a huge week and we have a big sell off. You know?
Okay, understood. Okay, that was my question. Okay, so maybe I can share the screen now, and just try to do one, and you can tell me if I'm skipping any steps or I should improve something. On the, let's say, can I do the replay here? Start
I think you
new.
could.
You can see my screen.
Yeah, I see it.
It doesn't let me go further than this is July. Oh, I went all the way.
You're on the
So let me
weekly. Yeah.
see. On the weekly, okay. So let me go here and let me go to okay. I'm just gonna go to random.
Mhm.
Random. All right. So first thing that I would do is I would mark my weekly because I'm watching for the week. So let's say this is perfect. This is Monday.
Mhm.
Let me see. Monday. Oh, it's just showing me Mondays. Okay.
Always, yeah, because it's the beginning of the week.
All
Like
right.
it's the weekly candle.
So I would mark. Oh. So this is what how I would do it.
This is the current week, by the way. You're already on the current week. Like this already took the previous weekly high.
So this wouldn't be my week line for this week.
Oh, okay, so you're looking at the next candle, the next week, right?
Yeah. So I would
Okay, yeah.
I would
Yeah,
try to
exactly. You
see
would put that, yeah. Previous weekly
Okay.
low, previous weekly high.
And weekly. Let me just put high, low, and then I would go to daily.
Yeah. So what do you see on the daily?
That we swept the weekly high already here, or no?
No,
Let
we
me see.
didn't.
So this is oh, let me see. What do I see on a daily here?
That's the weekly high that you drew.
Yeah. I mean, I just see the price reversing from that.
Go on the weekly again.
Okay.
Okay, you're take the if you click, I think, control, it's gonna activate the magnet tool, and you can like put like click the previous weekly high line that you have now, and then press control. Or is it shift? Try shift.
This is shift.
Okay, so it's control. Press control, or I think it's
Nothing.
command on your thing.
No, nothing. I'm
Take your
pressing
mouse, go to the left. See where there's a little magnet?
the magnet.
Yeah, go on the left where all the symbols are. You see where there's a little
Oh.
magnet? Just move your mouse over it. Don't click it. Just move your mouse over it. Okay, hold on. Click the little arrow next to it. Okay, there you go.
Okay, here.
Okay, click the little arrow next to it.
Okay.
Now do the same thing. Move your mouse over it.
Nothing. It's not showing
Let me check on my chart. Yeah, command. Okay, press command or press control on your keyboard. You have
Control.
yeah, control or command on OS.
Yeah, I'm pressing, but no.
Or maybe it's just a Mac thing, because when I press my control, it does the automatic magnet thing where I can just snap on. Yeah,
And what
maybe
would be?
maybe just press it, yeah, and move it.
What do I do now?
Yeah, just move it to the high. It should like automatically. Anyway, that's fine.
Okay.
Okay, so go on the daily. So now you're on, what day are you on?
Tuesday here.
So
So this is Monday from beginning of the week.
Monday, yeah.
Monday.
So
This one.
Monday expanded.
Tuesday.
Tuesday,
Swept the
Wednesday,
high.
Thursday. So that's Friday right now. You're on Friday.
It's Tuesday, it says. Tuesday 10.
But that's like 3 candles back. Look at the most recent candle.
Ah, this one. Friday, yeah.
Yeah, you're
Yeah.
on Friday.
Yeah.
So we're at internal. There's a fair value gap.
Yeah, I see.
So
Right here.
what does the next candle do?
What is gonna do here?
Yeah. Just
The next ones. We hit the fair value gap. Let me just put it. Okay. So we have this fair value gap.
on the
We
replay, hit the next candle just to see what happens. Okay, so this is the new week open, because that's a Monday. So we opened up with a gap up. We took the previous weekly high.
Yeah, I see.
Go on the next candle. That's Tuesday.
So we created a swing
We also respect the fair value gap on the low.
on the low. Yeah.
Next candle. Continued expansion up.
Yeah.
So that's the
And
day.
that was,
That's the new day open right here on a Wednesday.
yeah.
So if you go on the 4 hour there, we have a swing.
Right here.
Yep. And that's 10 o'clock.
So
What time is that? That's 2. So that was at 2 p.m.
2 p.m.
session.
Right.
So the PM session expanded up.
Right. And then we expect the C3 to go up also. And there is no liquidity nearby. Oh, we are at the. So how do we know that this is gonna go up and where?
Well,
Because it's
you have to look at the higher time frame.
right. Let me see. So on a daily,
Is this all-time highs? What day is this? You zoom all the way out. Like zoom out so I can see the full chart. Yeah, so you're
yeah,
at
that's why.
zoom out,
confused.
zoom out, zoom out. You're at all-time highs, yeah?
Yeah, there is no liquidity up to target.
Yeah, so you would expect it to continue bullish.
Okay. But this we already ran through the whole week, right?
Previous weekly high, yeah.
Yeah. So
So what's the next candle do?
here on the daily.
Yeah, so what does the next candle do?
But is this line now valid?
Check the weekly,
We are weekly.
because you moved it.
Yeah. So the weekly would be this one now.
No, that's the current week. You have to look at the previous week high.
Previous week, which is
The next candle,
This one,
the previous candle, yeah. That's the previous weekly high.
weekly high. Okay, yeah. So we went
So
through
go
it.
on the daily. Now check the next candle. Okay. Now check the next candle. So now we're creating that swing after taking the previous
And now-
weekly high.
Okay. And now that becomes a target because the week didn't finish.
I
or it
wouldn't
did.
I wouldn't say it's a target, no. But we already
No?
because we already took it early on during the week.
Mm-hmm.
We expanded.
This is Friday already.
Yeah, that's Friday. So now it's gonna be the next week.
Okay.
Check the next day. Because now we're moving into internal. Now we're at the internal of the fair value gap.
Right. This. And creating a swing.
Next
and
day.
This.
Yeah. Still in the internal.
And now we have this order block and fair value gap. So if this one tapped into both, we expect up or no? No.
There's probably an SMT there at the high.
Right. Okay. Okay. So let me do again.
Go day by day like this. Go day by day like this and check. You see what I mean? Like find the swings on the daily and where you would anticipate like candle 3 to be. Candle 2, candle 3 forming. Because this is still internal external. We hit the order block here.
Right.
No, the other one. At the bottom.
This one.
No. The other one.
This one.
Yeah, that one.
Okay.
And that was C2 because we closed above the previous wick. You see the body of the candle?
This one.
The C2.
C2 is this one.
No, that's C3. C2.
C2, yeah.
C2. You see how the body closed above the previous low's wick?
So, Alex, think of C2 as like a manipulation candle. Do we sweep the lower high?
Okay.
So in this case, we swept the low, so that becomes a C2.
C2, and the body closed below the this one. So that will be body closes below. We wait 3 to respect the narrative, which it did, and then we can frame it from the candle 4, the entrance.
Well, you would frame the entrance for candle 3 based off of that C2.
So within that bullish candle, you would have already entered. You would have already been in the buys within that candle. Yeah, at the lows there. Yeah.
Okay.
So check the 4 hour of that C3.
Okay.
So what time does it expand up?
So we swept the lows, right?
Yeah, we swept here C2.
So that's C2, and then go to C3.
This is all C3, right?
C3 is at the lows there. Asia low. Or sorry, London low. Yeah, exactly. That's C3, bro.
Forming.
So
Okay.
2 a.m. from the low.
So you see how like within the swing you can find another swing. You see
6
like
a.m.
how within the exactly. How within like the daily swing you found the 4 hour swing.
Yeah. So this would be nice 4 hour movement that we can catch from 6 to 10.
100,000,000%. That would have been perfect buys right there.
See
Daily C3 plus 4 hours C2 right there.
Look at the 10 a.m.
Yeah, 10 a.m. C4 expansion.
Yeah.
Go on the 15-minute now.
Yep.
Oh, you can't. It's too far back. Go on the hourly. Still, look at the swing. Yeah, that's C2, C3.
Swing and then another swing at the 10 a.m. candle.
Yeah, here.
Towards the right.
At
This
10
is
a.m.
10 a.m.
Towards the right.
Yep.
During New York, brother. Yeah, right there. Yeah, you see that swing?
Yeah, this is 3. This is the 2 p.m.
That's
swing.
2 p.m. I'm looking at 10.
Yeah,
2 p.m. Yep.
and then this is 10 a.m. Right. So
Yeah,
I
10
could have
a.m.
ran the whole AM session and then come back into this fair value gap
Mm-hmm.
and order block that we
Yep.
created. And then I would have my confirmation with the fair value gap and order block to continue up.
Yeah.
And that would actually be good trade because it aligns with the 2 p.m. volume as
And
well.
and it's aligning
Yeah.
with your daily too, because your daily is showing you the you already have the C2 of the daily. You're expecting the
That's your
C3.
P2. Yep.
You're bullish bias for the day.
And it's correlating with the Asia Soup model too, right? We sweep Asia low, target Asia high. Sweep Asia low, target Asia high. Like
Yeah, we
past
swept.
2 days, it's been following the model. So when you see a good swing setup, the Asia Soup model follows. You know.
Okay. All right. So let me try to do one after this. So let me go back to weekly to make sure I have. So weekly high, weekly low, and then I would go to daily. Yeah, it's hard for me to read the charts right away like you guys until I have everything marked. So this is daily low and this one is weekly daily high. So I have my daily. Okay, so here I see that on the, let me first see now with new what you told me, the weekly. Let me see in what bias I am. So I have higher highs and higher lows, higher highs, higher lows. So we are bullish for now, right? That would be my bias to think, okay, we are bullish. Then on a daily, I would watch
What day are
daily.
we? That's Tuesday. So you'd have to start at the beginning of the next week, so Monday. Move it to
Monday.
Friday. So move a few days. Because that's not the weekly high.
This is not the weekly high.
No. Move to Friday. Because for the new week.
So Wednesday, Friday.
Yeah.
And then I need to change my line now.
Now you're good because now it's showing you that that's the close. Now it's going to be a new week. Now you have the previous weekly high.
Okay.
Yeah, you have a valid previous weekly highs and lows now.
Okay, so I'm actually always watching previous
Yes.
weekly high.
Yes.
Always, because when it's like in the middle of the week and you're trying to find weekly highs and lows, you just look at the daily highs and lows. You get what I'm saying? It's just not formed yet, you know. So
Okay, so here I have my weekly and daily, and so I'm on a daily now.
Mhm.
But does this, so this doesn't look right anymore. The daily low is here, and then my daily high is here.
yeah, there you go.
And now just
That's your
say what-
weekly high. Yeah.
Okay.
Perfect.
So now let me see, what do I see? So before I wouldn't check nothing here, I would go directly here. But now what you showed me, you can tell me already what I would change. But this is what I would do earlier. So now I'm at 4 hours and I would see, okay, this is 2 p.m. So I wouldn't really look for trades. This is how I train. So I would skip this time because I wouldn't trade in
Yeah,
this time.
so now it's the 1800 open. That's the new open of the week.
So this is a new week.
Yeah, because look, it's Sunday, Monday open.
Okay.
And you see how we made a gap between the
Right.
three candles? That
Okay.
counts as a order block or fair value gap. So just keep
Okay,
that.
I did that.
Yeah.
Okay. So let me just see. So
In
this
most
is
cases, we tap fill the gap. So just watch the reaction.
okay. So let me just get to, I would let the Asia session. So do I need to change my daily highs and lows again?
Well,
Because yeah, okay.
No, you're good.
Yeah.
That's the previous. No. That's the current
No.
candle right now. You're looking at the previous daily high and low. So you're good.
You're
It is.
good. You're good. Oh, yep.
Okay. So we have this. This is 4 hours. So I would look from. Okay, so we are opening here. Why didn't mark me? Okay, this is a new session. No. We still didn't create the. Why do I don't see the Asia? It's on 1 hour. Okay, I was confused. Okay, so on 1 hour here, I would see that we swept the Asia low.
Not yet.
Not yet. We created. Okay, so we just create. Okay, so I would wait. This is one. Let me just see. So session started 8, and then we went to the bottom by 10. But that just created a session range, right?
Yes.
Okay, so then I would still try and wait to see what London does.
Mhm.
Let me see. It's 3 a.m. Still, I wouldn't make up my mind here because we are close to sweeping this. So I would just wait to see what London does. Are we gonna sweep? So this is already 5 a.m. We created a swing. I see this fair value gap we created here, but this is where I wouldn't really watch to get on the trades because we didn't really sweep any highs and lows yet, right?
Mhm.
So let me see what brings the morning. 7 a.m. Yeah, this for me would be a very confusing day. So now we swept the session high and it's 9 a.m. So I could expect the move from internal to external here. But let me see how does that look in 4 hours. So we have C2, C3 reversal. So on a 4 hours, I expect this to tend to be C3 expansion.
Let's see what happens.
And let me see again on the 1 hour. On the 1 hour, we swept this, so that this is. I wouldn't do nothing yet here. Let me see 1 hour. Yeah, so we got the expansion here.
Mhm.
So 1 hour. Let me see.
We're in the gap, mind you, to the left.
Right. This one.
Yep.
So that's like a fair value gap. So, but this means that we swept it
Mhm.
and came back.
Yeah.
Okay. And then we have.
So what does the next hour do?
Yeah.
Let me
Just keep going.
see what time is this. 10 in the morning.
Don't think about trades right now. Just look at the behavior.
Yeah.
Okay. Yeah. So we swept this gap and we are creating. We tapped into here again. So let me see. Would this be? This would be a swing forming bearish.
Possible.
Possible. Let me see. Yeah, this would be a confusing day for me. I
It's
wouldn't really know
very
what.
sideways. We didn't take any previous daily highs or lows. It's just moving sideways. But yeah,
Yeah,
check.
so that's why I wouldn't really know. I would just keep it
But
until.
notice how we're rejecting off the gap, the weekly gap. So that's a very strong area where, we'll either
Mhm.
go through it or we'll reject off of it, right? In this case, we're rejecting off of it. So
Okay.
But even
still
here,
following the model,
you could have
right?
framed the setup here even.
Yeah, exactly. Like we swept Asia high, we're tapping into the weekly gap, and we're creating that hourly swing. Like you said, like we're before that, this bearish candle, we were like on C3, and you said, we could expect to go down now, right? And I said, yeah, possibly. And that's exactly what happened. We went down. And
Yeah.
so
Check
you
the.
definitely could have taken a short off this setup here.
It sucks that
off
you
the
can't go on
hour.
the 5 minute or the 15 because it's too far back.
Right.
But
But
then
the trick is
inside
that I
that,
would-
inside that, you would find you would find the change of state, order blocks, fair value gaps, like all aligning to go
Okay.
down.
So
Let-
within like C3/C4 at the top,
Right.
you'll be entering for your cells.
and then I would at least this
Yeah.
liquidity here.
Yeah, exactly.
Okay, let's
Maybe
see.
it'll reach the previous daily low.
Oh, maybe not.
We hit
Yeah.
the
We could
inversion.
check 4 hour. Oh shit.
Because
What?
we did, because it just came back. Look, check on the hour.
Oh yeah.
Because
So
the
go back to
the
hourly.
replay tool shows you the full candle
So
already.
go back to hourly. Yeah, it does.
Now it's gonna form a swing to come back down
Yeah. Yeah.
off the range.
Yeah.
Boom.
And it's
So even if
down.
you did enter before, you would have been safe because your stop loss would have been at the highs. Yeah, exactly. You'd have been safe and just
Yeah.
held
So-
the cells and down to the lows. Yep, boom, exactly. We just hit the lows and boom, there's your TP. You're out.
Yeah. Okay. So this is this day I wouldn't trade because I was not aware the behavior of this gap. I could
just treat it as like a fair value gap. You know what I'm saying?
Yeah.
Like,
so then it will be double confirmation because we swept the session high and we
Triple.
hit the fair value gap.
we have
Mhm.
many swings, showing
Right.
like even 4 hours showing swing to go down. Hourly showing 2 swings to go down, like
And which day is this already? This is still Monday.
Mm-hmm.
This is all
Same day.
Monday.
same day. Yeah.
Yeah.
It's
So
so
now it's the next day.
Yeah, now it's the next day. Yeah.
So let me go. So I would need to mark new days, previous day high and low.
Yeah. So you see
At
how
this point,
the replay tool is showing you already the
It's
full
showing
day.
you already like the full
So,
data.
so you see how
Yeah,
the next day we expand down to the previous weekly low
mhm.
because we already swept. We swept the previous daily low, and the target was the previous weekly low. Go on the weekly candle real quick. I want to see what the weekly looks like. Yeah. So okay.
that was a straight dump thing.
So that would be like a C3 pushing back down.
Yeah, I see the C3 on a daily.
Mhm.
C2 and C3 all the way down.
Mhm.
So I could have expected on the C2 here,
Mhm.
this C3. Okay, this we came to the weird day. Let me try to get to one regular day. So I would have to go daily, move it to the previous one,
Mhm.
which would be here.
We already swept previous daily low, so you don't have to put it there.
The daily low.
We already swept it.
So
Same
what,
with
what
weekly.
He's just putting it to have to have it visually on the charts.
Oh yeah.
So let me see. So now that I marked the daily high and low, so this is, you see how it confuses me now. So on a 4 hour, I don't see we push through these.
Yeah, it's the replay tool. I'm telling you, like if you go on the high time frame, it'll show you the full candle, like trading view shit like that.
If you go, yeah.
That's why
Zeller
I
doesn't
told
do
you
that.
earlier. Remember I told you that
Yeah.
on 4 hours I could have seen already on the daily, or I could see that we swept the low, but then when I went back to the lower time frame, I don't see, and you see now why.
Yeah, because it's trading view.
Uh-huh. So let me then figure out why this happened. So we had
We have a swing.
swing here. We hit this. Okay, and then we have this order block here on a 4 hour that this is respecting this one. Would this count?
The green candles. Because
The
you're
green.
bearish.
Okay, so it matters. So if I'm watching it to go bearish, it has to be green candles then that I'm
Yeah,
marking.
it's the
Okay,
opposite.
okay.
Yeah. So
Okay.
look at the next hour. Like go on the hourly. So we have a order block there, fair value gap. What happens in the
here
next
we-
hour?
Let me see. So this is 7 in the night. And here we swept a daily low.
Mm-hmm. So what happens after we sweep the daily low? Go on the next candle.
It should be
Next candle.
at least that we get to the we go back.
We continue down
Yeah.
because the
And
narrative
how
is
often
bearish.
That's where the bigger time frame comes into play.
Mm-hmm.
You see it sometimes, you saw the other day, I would come on the chart and in 3 minutes, I would find those trades that I would send to you.
Mhm.
Literally, it took me 3.5 minutes to find a trade. And you see, I have now a hard time to do the same thing. I really don't understand why.
It's just a
Is it
confusing
because
day.
of is it confusing day or
Yeah,
you know,
it's just a
this
confusing
I would say, well, we swept the daily low, and normally we would at least reject after
But
taking
we
that.
had a rejection. We pushed up off of that, but it failed to expand because we're bearish.
Mhm.
So go on the next
So
hour.
on a weekly, we are in the bearish or daily.
Go on the
Okay.
hourly. Go on the next hour.
Okay.
Now we're creating Asia. Now we swept again, double on the previous daily
Yeah.
low. Next hour. Now we're coming back into the range.
Right. And here we would expect we swept the daily low, and this is the session high that we already create. So we would
We're still in Asia.
yeah. Let me see. So again, we got
Now we're coming back into the internal fair value gap. We're sweeping liquidity high.
so this is the fair value gap we have here,
Mhm.
and this is an hour. So okay,
Next candle, next hour.
just change this. Okay.
Okay,
So
now
now we are
we swept it again, tapping into the fair value gap.
fair value gap. Yeah, and this is sweeping the session high
Mhm.
at 1 a.m. So we swept the session high, and then we are going into
2 a.m.
2 a.m.
next hour. Now we're
Okay,
creating the
so we
C2
C2 from the
fair value gap.
fair value gap, and also the order block.
Mhm.
We still watch this one.
Yeah,
I mean, it might be
it's still the
up-
same thing. Yeah, like you don't have to
Okay.
move it. You're good.
No, okay. So now we have the session sweep, fair value gap tap, and order block. So at least I would expect that the C3, if it starts to go down, that we can target the session low at
Session
least.
low and the previous weekly low. Yeah.
Okay, previous, which would be here,
No, it will be the
Like-
line that you drew, the
Oh,
previous weekly low.
Uh-huh. all down, all the way down. Okay, so let me
But
see.
that would be another point of liquidity that could be a target too.
Right. So okay, it allows me at least to go to 30 minutes.
Mhm.
So here we also see the swing 330. So this is C2. So here, to not miss it, if I already see it's forming, let me see on how does this look. Okay, on a 1 hour, this would be my C3.
D3, yeah, and the 30 minutes swept the high.
So the high, let me see. Which high?
The previous candle high.
Okay. Okay, so I keep forgetting that's important. So basically, we created a swing and then
It's important
a swing.
because I'm framing it based off of the hourly.
Mhm.
See what I mean? Because it's the C3 for the hourly.
C3 for the hourly.
And it swept the
Okay,
30-minute high.
so now we can, because this is perfect. So we can from the candle 3 already enter.
We would have already entered this. Because
Yeah.
on the
Where?
yeah, because look, the 30-minute.
The 30-minute. Okay.
Yeah, that's your C3.
Which one?
The 4 hour.
These two.
Yeah,
These two. So
4
we
hour.
would enter here.
4 o'clock.
No.
Yeah,
Okay,
right there.
here.
That's the beginning of C3.
So on a lower time frame, we would see a swing here to
Yes.
enter. Okay,
Well,
so
it swept
basically
it. It swept it.
it's so we would wait for this one or no?
But that's it. Yeah, of course, because it's hard because you can't go down on the 5-minute. But like you would see it would create a change of state order block manipulation there, and it would start to push down. Go on the hourly and just go on the next candle. Like what happens next candle?
Okay. Yeah, it's pushing down. So at least we're gonna sweep the session low
Mhm.
or no?
Now we came
No,
back. What is that? Is that 10 a.m.?
8 a.m.
8, 9?
It's
Okay.
9 a.m. So we have C2, C3 reversal here.
Mm-hmm.
So we would expect the C3 candle to continue. Yeah. So we would catch this on a lower time frame because we are expecting C3.
Exactly.
Right.
But you see how timing is important?
Yeah.
Timing is important.
Yeah, this I don't know. I don't know what happened. I had it understood few days ago, and then
Don't
again,
hinge all your knowledge on one trading session. Just because you
right.
have like one day where you're like, oh, I don't know, it doesn't mean that you don't know anything.
Yeah, it kind of today when I sat down, it was nothing like the previous week. Every day previous week, I was able just to sit down and in 3 minutes do this, and I
Yeah,
took
but
3 days
that's
break.
how it is. Some days are easier than others.
Mm,
That's just how it is.
okay. Yeah, I don't know why.
But this is easy right here, because we're looking at it hour by hour.
Right.
But look at the session. Like this is a New York reversal session because we made Asia, we made London, and then what did New York do? New York swept London high and it reversed, and it continued to the lows because the narrative on the higher time frame is bearish.
Right. Yeah. And
See the
here
4
we
hour?
broke. Yeah.
Where's the 10 a.m. open?
Here.
Yeah, that's a 10 a.m. That's a C3 open.
Yeah.
So it's very obvious what's happening here.
Yeah. Okay.
Does that make sense?
Yeah. I just need to. I need to keep doing this every day. I can't have 3-day break because I get confused, and I need to be more consistent on this.
Yeah, just do like a few, even like 30 minutes in a day or something. You know
Yeah.
what I mean?
Yeah. I need to. Because it's for whatever reason I have it very clear, and then if I'm not there for 3 days, I get confused very easily again.
You're fine,
It's,
dude. You're fine. Don't don't be too hard on yourself. Just take it day by day.
Let me try to do a replay on where it lets me go to the lower time frame.
Mhm.
Let me just do one more quick one and that's it. So replay, start new, November, whatever. Okay. So I would go to weekly. And let me just try to do what I did the other day
Mhm.
when I was sending you those. So this is how I was actually having monthly as well. So let me do that too. Monthly. Here we have the same. So I'm just gonna change this, and then on a daily. Daily low. Okay, so let me see. So I have everything marked. Which days this is November. Is it allowing me to go 15 minutes? Yeah. Okay. So let me go on 4 hours and see what's going on. So we are going towards the daily high. And what is this? This is 6. So this is what I would usually do. I would just wait until I get through Asia completely. So let me see. This is 12. This is London already. Is it or no? Let me see. 7.
Not
It's not
yet.
showing me. Not yet. This is okay. This is Asia.
Asia.
Okay. Asia. So we would go to Asia's high. And then we have so gone. Let me just see. So this is already 6. Okay, so this is how earlier I would try to see what's going on at this time. So this would be already around 6 a.m. So here I have the swing, and it's a C2, C3 reversal, ideal formation. So I'm expecting to take the daily highs based on this. So I would go down to 1 hour and to see what's going on here. So we swept the London's low, created a swing, and then we have this fair value gap here that I would mark, that we are bouncing from and respecting. So I would have this marked, and I would actually already see here if I can. So what I expect to happen is that New York reverses from here, from the session high, but I would maybe even try to catch this trade back to the session high because we swept the London low and we have the fair value gap. We have this order block here that we also tapped in. So I will put these things on here. Then I will check on the lower time frame what is going on. So here we swept, we have a swing, we have another order block on a lower time frame that we respected. So that would be another confirmation that it should go up from here. This is a seat, it closed inside the candle. So that means we trade candle 3 and 4 as an expansion. So I would already here, let me see if I missed something. We have the fair value gap, another one there, the small one that I would expect to tap in on a 5-minute. I never used 5-minute, but in this situation, I would go even lower to try to catch it to here. But I would basically frame my trade something like this from here, from the low on this order block to the session. But let me see, because I have these multiple on a higher time frame, we tapped in the fair value gaps and order blocks, and then on a lower time frame, and we have the inside. So I would probably, but this would be not be a good trade, right? Because it's 1.47, right?
Yeah. You want
So
at
that
least two.
wouldn't be at least two. So that means that this would have to go up to here, which I don't really expect. But let's just, okay. So I expect from here New York to reverse down. So let me just see what would happen here. If we would, okay, so we would hit the session probably, or no. Yeah. So session high. So it would still be, I get the idea, right?
Mhm.
But it wouldn't be a good trade in terms of risk to
Well,
reward.
it would have if you would have put it at 2. It would have still hit 2.
Right. But the reason why I wouldn't put on 2 is because I'm afraid of this first liquidity we have to push
It's not
through.
going to reverse right at the first tap. Like it has to create a swing before it reverses.
Okay, because that would be my second. How I would decide where to put the 2R, I would look back here and I would target this, which we hit. So if I knew that, I would have put 2R. So this is what time? 8:45. So that would be kind of my first trade on this.
Yeah,
That's how I
that's a good
look at
trade.
it. Okay. And then here, if I see the swing forming like I do, and that's what I expected, because we had consideration, manipulation to the upside, and then from here I expect reversal. So let me go to the, let me see what I would do here. So we have the order block, since I'm waiting for the bearish. But first I will check the higher time frame here, at least 1 hour, to see how it looks up. Oh, so I don't see any swing on the 1 hour yet. I mean, this is most likely gonna take this liquidity before reversing.
Good observation.
So I wouldn't really. That's why I would, after I saw the 1 hour, I would hold on my reversal, because I believe that they're gonna push it here first. Let me see on 4 hours. Oh, definitely, because here I see the swing. We tapped into this fair value gap here. So this would tell me that definitely we are gonna grab this, because this is a C2, C3 reversal. It's a ideal form. So this one here should be, let me go to 1 hour. It should go up. Yeah. Okay. So this is what I would expect on a lower time frame. Probably I would catch it.
Yeah, look at the
earlier.
swing on the 50-minute.
Yeah. Okay. And then I would look to take trades from, and this is 10:45, so we are still in the session. So that would be good. So let me see. I go to 1 hour. We swept this. Let me just zoom out to see what am I expecting. So this is daily high that we just swept. So I would at least expect it to go to the session low, correct? For the day. So
London low.
see. London actually, even Asia low. So I would basically need to form my trade on a 5-minute if I wanted to see. Yeah. So I would kind of look to enter on this swing here and catch it So this would be my entry here. If I see the this is C2, I would at least enter
Yeah.
set here. Oh, let me put it on the C3. So my entry would be here as soon as we, and then I would target, but this wouldn't be enough still. So
Where's your stop?
well, I would at least
put your stop first.
stop here, no longer than this,
Okay.
because if it goes from there, so yeah, definitely I would assume here I see a lot of liquidity here, but I would safely put it to here. Let's see, this is 2.6, so even if I put just to here where I wanted to, no, this would be too low, so it would have to be at least, let's do the 2 on this one. Okay, this is the trade I would took down. So let's say, is he gonna respect it? Yeah.
Mhm.
Yeah, okay, so you see, I'm doing it right, but I'm not doing it right.
What do you
I
mean?
don't
What do you
get
mean
to
you're not
this
doing it right?
because I feel like I'm not getting. It's like when you guys talk about it,
What do you mean you're not getting it? I
Um,
don't understand.
it's
If your
like,
trades are hitting, what do you mean you're not getting?
so you see, I just hit in front of you the 2 trades that
Yeah.
are 2R that were great, right?
Yes.
And and I'm still so confused by,
What are you confused about?
so I wasn't wrong in waiting of this daily high
No, you did.
sweep, right?
You did perfect.
Okay, cool. And why was this so much? You see, I did this in 5 minutes, and then the other previous one, it took me an hour just to, I mean, an hour. It took me 10 minutes just to realize where are we even
Because
going.
some days are easier than other days. Like it's not going to be like
Okay.
every day you're going to be like, oh, I know exactly what to do 5 minutes in. Like you did good. This is good. Like
This is good.
it's
Okay.
normal. Even me, some days I'm like, I don't know what's happening. Let me just skip it.
Mm.
It has to be
And then
clear. Like this is clear for you, then obviously it's a good day.
and now, for example, if I wanted, this is 11:15, and I want to catch the 2 p.m. Would I say, okay? Why would I catch 2 p.m.? My reasoning is because I think that we're gonna go. Let me just see the whole picture. I think we are gonna go lower, at
Yeah.
least.
Because of the liquidity.
Liquidity, right? So there's a, I would at least assume here, and then if we would break to this, we are going to the daily low. That's
Yeah.
my theory. So what I would do here, considering the time, is not like I'm rushing to re-enter because the market is going down, but now what you explained to me, I have the 2 p.m. sessions. So what I would do, maybe on a 4 first, I would mark. Let me see what I need. So that's the thing. Maybe I wouldn't even use the 4 hour. So that's where I think I'm not doing it properly, because I can already frame it only from here,
Yeah.
and I'm thinking, is this even right? Because I'm not checking the 4 hour.
No, it's
Because
right. It's right.
it's
Because
right.
yes, but the 4 hour, just think of it in terms of the single candle, the single 4 hour candle. Okay, like a single candle has to create a wick. It has to open, low, high, close. Yes.
Mhm.
So that open, high, low, close will be created on the lower time frame.
Right.
That's
So
what I
here
mean. That's what I
would just
mean by
go.
keep mind of the 4 hour.
So this is a 10, and by 2 p.m.
Yeah. So
it's
10
another.
10 kept pushing down. It already hit your target. 10.
Yeah. And what I expect is that the next one, because we have C2, C3 here, this is C2. I expect the C3 to hit the daily low.
Yeah, but what kind of C2 is that?
This is a C2, C3 expansion.
Yeah, so
Uh,
it's a
maybe
C2. It's a C2
Ideal.
reversal expansion. Yeah.
Yeah. So what I would do is I will go onto the lower time frame, get my fair value gaps in and order block. I would go with this one because I'm looking for bearish
Mhm.
down. So I would go to this one. Then I will go to 15 minutes. Let me just see this. Here we already have. Okay. Let me just see. So I got confused. Let me go back to one. So we have C2, C3. So I would wait some kind of reversal into this.
Mhm.
Let me see if that would happen. I would wait. So let me see. Yes, because here we hit all these liquidities. I would assume to go up, create a swing from here.
Yeah.
And
So
then
so
go.
what you're describing is the 4-hour candle. You understand what I'm saying? What you're describing is just lower time frame of a 4-hour candle, because the 4-hour that swing that you're talking about is the wick of the 4-hour.
Of the week, which would be the highest point of the 4 hours.
Exactly, because
That's-
that would be the higher, yeah. So
Yeah,
so you're
okay.
not doing anything wrong. You just have to understand higher time
What
frame and
am-
lower time frame relationship.
Yeah. So let's see with so how here we never went back.
Yeah, we
And
just kept pushing down. Because there's
So
probably an
my
SMT with ES on that. Like ES
So-
probably tapped into it.
I would base my entrance once we push through this, I would be actually entering on this candle. And why is because I believe that there is no other liquidity that can hold us. But let me see. Because if we push through this one and there is no other, bank will only stop when it collects the next liquidity. So
Right.
only thing is where I would put my I would assume that it wouldn't push through the previous candle.
Uh-huh.
So I would just leave it there. My entry would be on a lower time frame here. Let me see. So probably okay, here is where I would enter.
Uh-huh.
I would wait. This is C2, this is a perfect. So I could have entered already here
Exactly.
on a 5-minute. Let me see. So here we created a swing. Let me see. We have an order block here that we tapped in. Oh. So we have this order block created. Do I need to mark all this or this is enough?
That's enough.
That's enough. So we have this. And this is C2, C3 closed outside. Perfect. So yeah, as soon as we had this rejection here, and I see that it tapped into this order block, I would definitely go like this.
Mhm.
I would above the order block and all the way to daily low, and let's see what would happen.
Yeah, because it's internal to external.
Yeah. So and the reason why, because I don't see any other reason for bank to stop before it takes this liquidity on the bottom. So let's see what's gonna happen. Yeah, that's 2 winning trades
Yeah.
in the same day.
Yeah, so you're doing
Okay,
fine.
so- good man, good. It's just and you see, it's not I'm doing it because I memorized stuff, and I'm telling
Yeah.
you why I think is not gonna stay, why I think is,
You're
and then I
you're
also told
you're
you
good.
why
You're
I
good.
Yeah, why I would re-enter because
Yeah.
I would target only this, and my re-entry would be as soon as I push through this liquidity, I know that I can re-enter the same day, and now I had the extra confirmation because that was at 2 p.m.
Mhm.
So it was just perfect.
Yeah.
But for some reason, when you guys are doing it, I'm just so confused. You're doing the same thing, and I just don't get it. It's I don't understand why when you guys are showing me it's just so confusing. It's like you see things before I see them, and
It'll
you
come
see it
it'll come with time. It'll come with time. Like
Okay.
you'll catch on. Just keep doing what you're doing. You're doing good.
Good, right? I mean, you saw
Of
I
course.
put all the correct order blocks, all the correct fair
Yes.
value gaps, right? Didn't
Yes.
skip any important. I did the time frames
Yes.
good, right? This is
Yes.
the first time I used 5, and this was beautiful because on 5 I could see it respecting the order block, creating a swing under the low,
Yeah.
under the liquidity I need. So now I realize why I need the 5, because it's the actual teller of when I go in. So now I answered my last question that I had,
Mm-hmm.
how to go in a trade. Well, I wouldn't wait if I have 5-minute confirmation that we push through the last liquidity and we have this one here, I would just enter it on C3, definitely tapping the order block. Okay.
Any more questions?
No, sorry to keep you guys, but I got so confused today that I just you know what was it? I had this order in my head, and then I was working a lot the night shifts and had not much sleep. So when today I came, my memory was a little off. So I just got confused on, on which fair value gap first do I watch? Do I watch the top on a 4 hour, or I watch the top on the lower frame? For some reason I just got super confused. But now I understand it's not about only that, because now I saw on the 4 hour, I saw what is forming,
Yeah.
which allowed me to see the smaller time frame fair value gaps being respected. So the 4 hours is more that, okay, if I see C2, C3, C1, C2, perfect, ideal, okay, I can expect C3 continuation. So
Yes.
should already go and do what I did. Okay, cool.
Good, man. Good job.
I started today 4 o'clock. I didn't get up because I didn't really I just didn't understand it. So I'm already doing it for 6 hours now. 6.5. Yeah, because I had to refresh. But now I have it written. You answered all my questions. If I see it's a confusing day, I just don't understand. I don't see
It
the
has to be. It
correlation.
has to be clear. You know what I mean?
Okay.
It has to be clear. If it's confusing day, then just skip it. It doesn't matter because you saw how little it takes to be profitable. You know what I mean? Like,
Right.
you only need a few setups for the week or for the month. Like, you don't need every single day take a setup. Like, you're good.
Yeah, this two would be clear that day.
Yeah.
So this would already feel I would be done for my week, for the week, literally.
Yeah, exactly.
This was a big win here.
Yeah.
I didn't see on a
Even from the
lower.
top, if you would have entered
Yeah.
like
Yeah.
it's a big win. That's a big day, you know?
Yeah. Okay, cool. I'm gonna practice from tomorrow every day. I'm not gonna skip and until I really get into so it becomes to me natural switching between time frames.
Yeah,
That's
yeah.
what I
Just
need.
keep practicing that. But right now, bro, you're doing good. Don't worry. Don't be hard on yourself if there's a confusing day. Like, it's not you, bro. You know what I mean? Like, you know what to look for. You're good.
Okay, cool. Okay, great. So I should just go back in time and keep testing like this,
Yes.
and then go to the TradeZilla.
Yeah,
So
yeah, exactly. When you start doing TradeZilla, you're gonna take like positions, you know?
which is like a live trading.
Yeah,
Right?
it's like live trading. Yeah.
Okay.
Well,
Okay.
it's backtesting, but you'll take positions. Like, you'll have an account, and you'll have, like, let's say we'll do like a demo, like $50,000 account, and then you'll take positions and try and hit a goal of like $3,000 like 5 times, you know?
Okay.
And then once you got that, bro, you're pretty much ready to take live positions.
Okay. Okay, great. So I'm I don't know how far in the training we are, but I'm gonna let you know when I'm comfortable.
Yeah, just
in
keep practicing. And
understanding.
if you have any questions, just don't hesitate, hit me up. I'll hit you up whenever I can. You know what I mean? Like, I'll
Yeah.
answer your questions, because you'll probably have some questions along the way.
Yeah, mine are pretty much answered for now.
Mhm.
I'm gonna try to do this. So you see, again, I did this without seeing the bias.
Yeah.
You notice that?
Yeah.
So I need to incorporate those things. Like,
Well,
if
see, that's the
first
thing.
step-
Like, your bias can develop as you're watching the charts, you know, because it doesn't have to be like a formal thing like that. You know what I mean? I'm just telling you, like, okay, from the higher time frame perspective, the bias is this. But like, if during the day you're seeing the swing forming or whatever, and you're like, okay, well, you're already establishing your bias because you're like, oh, we're going down. You know what I mean? Oh, the liquidity's here, we're going down, obviously. Your bias is established already intraday.
intraday. So if we sweep a daily high, even without watching a weekly bias, and I have a clear swing,
Yeah.
and so I can just take the internal,
Yeah.
external to internal without.
Yeah, you're good.
Okay, all right.
Just keep
So
practicing what you're doing, man. You're doing good. You're on the right path.
all right, great. Yeah, I mean, I'm glad that I hit these two trades that they were actually
Yeah.
true. So you see that I'm you know, it's based on the knowledge, is not on guessing.
Yeah, exactly.
So
And
Oh.
don't be discouraged if you have a like a day that's confusing. It's normal, dude. Like, even me, I have days that are confusing, and I'm like, well, I'm just gonna skip it.
I'm so sorry. I gotta run. I have people landing at the airport in 12 minutes. I completely forgot.
No worries, bro.
My delayed. Oh my god. I gotta run. Thank you so much, guys.
No problem. Take care, man.
So much. Sorry about that.
No
Oh
problem. man.
my god. Thank you so much.
Take care.